All right. Good morning, everyone. How's it going? Welcome. Welcome back to the 5ers live trading room. It is Tuesday. The markets are actually, I have no idea. I don't know. What are the markets like? Let me know in the comments. What do you think? What do you think? What is going on in the markets today? Because I haven't really looked. I've just done some done some work here and there, looked at a couple of charts, haven't really dived into the technicals of the markets just yet, and that is something that we're going to do in today's live stream, of course. And I would like to ask you all, how are you guys doing? How are you doing? Let me know how you are today. Let me know where you're from. I want to know where you're all from. I know we have traders from all over the world, always as surprised and impressed with the global reach that we have here at the 5ers. Yep, that's right. Drilling cans. Yeah, that's right. I am back. Thank you. I've missed you as well. I don't know who you are, but I definitely did miss you. I've seen your name around though, so I don't know who you are, but I know that you are here regularly, and I do definitely appreciate that. All right. Got Tanzania, from Finland, living in Ibiza. Wow, that's pretty cool. Ibiza looks like a very, very cool place to live. A fellow Scandinavian. Why did you move from Finland? You don't like the fact that you have good weather like 2 months of the year. You don't like the fact that Finnish people are very quiet and introverted. But I bet you missed the sauna though. Big sauna culture in Finland. I have a couple of Finns that live in my town, and they all have built-in a sauna in their house. Okay, so any updates on the graphic card? I love that we're starting these live stream with not updates on the market, but updates on my life, and I'm gonna update you all. Okay, so updates on the graphic card. It has now moved. It has now moved from the floor to a shelf, not inside the computer yet. Because honestly, if it's one thing I do not have enough of, like probably all of you, is time. Like, I need to upgrade my PC. I need to get the graphic card. I mean, it costs like $800. I should be able to like prioritize that and pay money for it. But I need to upgrade my equipments here. But yeah, all I do is work. But yeah, it's got it right here. It even has like the plastic on it. You see, you know what? Let's do it. Let's do it live. I love. Don't you love this feeling of just being able to like peel this off, like it, and everything's just covered in plastic. Let's do it live. Let's listen to the sound. And for all of you who's watching this and like you're new, and you're thinking, wait a minute, I thought this was a live trading show. Well, you are completely wrong. This is a lifestyle vlog of a person living in a basement with a lot of screens, LARPing as a trader. Okay, so here we go. Oh, look at that. That is fantastic. This is the first time that this is ever peeled off. And now let the scratching begin. Look at the nice surface. Look at that. Oh. Okay, so this is problematic. Why do they put the plastic behind? Okay, never mind. They didn't. Okay, nice. Here we go. That's the graphic card. Maybe I should just look at it. Let's just put it on the shelf and just have it as a souvenir. They even have things on here. Let's peel that off as well. Look at that. 1, 2, 3 times. Okay, welcome to the live stream. Welcome to the 5ers live trading room. This is where we do everything but trading. So that's the graphic cards done. The plastic is peeled off. Now, what do you think of what do we think about the markets? Let's peel off the layers of the markets as well. See if we can find something interesting. Right now we're looking at the dollar. Yeah, I bet it's really warm over there, really hot. It's getting warmer in Sweden. It's 20 something. No, it's not. It's not even 20. It's like 17, 18 degrees. It's been the worst summer in such a long time. Like it's the middle of June or almost the end of June, and the summer is like slowly but surely getting started over here, which is just terrible. Everything but trading. That's the first show of trading that don't do trading. No, we do trading. We do a lot of trading. We just be warming up here. What positions am I in? Well, let's see. Let's see if we have anything interesting happening in the markets right now. By the way, guys, make sure that you do hit that like. Hit that like, because when we hit 500 likes, I will give away an account. I will give an away account to you. So hit that like. Right now, my algo is long GBP JPY. My discretionary trading system is long USD JPY for a swing trade. I've been long USD JPY for quite some time. Give me a second. Quick. Could answer a message here. Okay, so we are going to look at the let's go to USD JPY and let me know if you do have any yeah, okay, so this one so I've applied somewhat of a man, this is absolutely sucks to be watching, honestly, because so I had a trade on Euro JPY, right? And the trade on Euro JPY, I have to actually so long story short, enter the trade, good trade, got stopped out before it hit TP. So what was the trade? What was the trade? So I think I have to go back and look at, see if I can find if it's this shot right here. Yeah, okay, that's the one, right? Okay, so this was the trade that I believe I took. Okay, so yeah, it is what it is, right? But I got in on the breakout. Now this was such a good breakout. So I just had to adjust the mic. So okay, so this was such a good breakout, and honestly, I felt really good about this trade because I've been monitoring for a long time, even a couple of weeks. You know, had my alerts, and the alert goes off, and everything is looked great, right? And I said, okay, we have momentum, we have a breakout. I'm gonna trade Euro JPY from the breakout level to the 166.55 level, looking at the fact that we might have a, you know, that would be the breakout, you know, that, you know, we had that breakout FTA, which would be that high. And then if you look at the high time frames, you know, on this move, I do see that Euro JPY has the potential of reaching this level all the way up here. So I kind of wanted to just get in on the move that it felt like I was almost certain that it was going to happen, right? But then I entered on the breakout, and I got stopped out right here. I got stopped out on that wick before hitting that TP. And while price went down and started hitting this level, that was, you know, in the evening for me, right before I was going to bed. And I felt, you know what, this looks so good from a high time frame perspective and a low time frame perspective, and the momentum is there and everything's there, right? But then I woke up with price stopping me out in the morning, and then throughout the day, slowly but surely getting back up into profit and hitting that TP. But of course, I was already, you know, I was already out of the market. I got stopped out. So that was a very, that sucks, right? And I'm currently down on my high stakes. The high stake, is this high stakes? No, it's not. This is not the high stakes one. Okay, let's see. Where do I have that one? Okay, so on my high stakes account, I'm currently down 3.8%. 3.8%. I've had, I mean, I would say that I've had a couple of good trades, but I have managed them not that great, and some trades have, you know, not been perfect. So it's a combination of both here, I would say. Combination of both. Henry is shorting USD JPY. We also have, do we have news? We also have news. Let's check the news quickly. What do we have in terms of news? What is the date today? This is 17th. What time is it? It's 10:47. We have at 11. We have the German ZEW SEV or whatever economic sentiment. That is obviously a big thing for the euro area, as Germany is a big player in that. But that's about it, I believe. Let's take a look at the Forex Factory as well. I'm looking at financial news, and also looking at Forex Factory. So German, that one is a orange folder news, so no worries about that. And of course, we have the core retail sales coming out of the United States is what normal people call it, I believe. Okay, so Euro JPY, I think this is this is a really good looking breakout here on Euro JPY. I'm going to cover USD JPY in just a minute as well. Now, what I see here on Euro JPY, obviously we're above a level where we have not been traded for quite a long time. We are trading above this level for the first time since October 2024. We are reaching a high time frame resistance area right here, and you can see that by looking at the way market is pausing here. Okay, so it's kind of pausing here. There's something going on. There's a move down, and then something is going on here. And then at the same area to the left, you also have support. So you're going to have support here, support, resistance, something going on here. So I do believe that this whole area, like this general area right here, is resistance and should be viewed as high time frame resistance. This is the first time testing that level since July 2024, which makes it a full year almost of testing that level. Now that's not the first retest, but kind of, you know, let's say the almost first retest, if you can call it that. So if we add the fibs here, we can also see that we are right now testing the 0.618 of the whole move to the downside, testing the 0.618. We're basically entering the local reload zone, the high time frame reload zone, right at this moment, where we have the 0.618 confluent with that high time frame levels. For Euro JPY, I am no longer looking for longs. The long is like the trade to the upside, the technical trade to the upside. The breakout trade is gone, and we've played that. Some of you I know joined that trade. Some of you made some money on that, so congratulations on that. Not financial advice, as you can see. Do not follow me. If you follow me, you're gonna get stopped out before your take profit gets hit. But the move is already done on Euro JPY, I believe, so I'm not going to be looking at that one. Another one that I'm looking at for a swing trade long-term trade idea is USD JPY, and now we're getting to USD JPY for Henry. And this is the trade that I'm looking for, USD JPY. And I think we have a long-term perspective here. I think, we're looking at the overall long-term perspective. There is, of course, a lot of weakness in the dollar. This is a technical play. This is not a fundamental play. I'm not taking this trade based on fundamentals. If I were taking this trade based on fundamentals, I would not be long USD. But the way that I'm trading, looking at my swing trading, is I feel like I do not have the necessary knowledge to be trading based on fundamentals yet. I do, I am subscribed to multiple macro newsletter and services where I'm getting, their input on the macro environment. And then of course, like to listen to LJ and Dirk when they talk about macro as well. But I feel like I do not have the knowledge necessary to make investment decision on my own trading based on the fundamentals. What I do feel though is that I am bullish risk. I'm bullish on equities. I'm bullish on gold. I'm bullish on Bitcoin. I feel like we're in a risk on environment, even though that we have these tensions, geopolitical tensions, especially now between Israel and Iran, and then of course we have Ukraine and Russia, and everything that's going on around the world is of course putting weight on the risk on sentiment. But then you look at the S&P 500. Almost at all-time high, despite what's happening. We have not completely broken down. Are we going to see escalation of a war in the Middle East? Of course, that's going to have risk of implications. And if United States is going to be joining, of course that might change the macro landscape. But right now, I'm feeling like I'm at risk on, which of course does not really align with the USD JPY trade. But it's also important to differentiate between your investment account and your trading account. So what we're looking at right here, this is a trade on USD JPY based on technicals. And when I'm trading my trading account, which is my personal trading account and the funded accounts, I'm trading based on technicals and not really so much on fundamentals. Because if it's one thing I've seen is that this is a good question, by the way, but if it's one, and yes, of course, fundamentals is I would say fundamentals is, of course, you can add it to currencies. It's fundamentals drive all market. Okay, it's not the stocks. The interest rates and all of that is very much driving the currency market. But what I wanted to say is, I have my trading account where I'm trading based on technicals, and then I have my investment account where I'm long stocks, gold and Bitcoin. Basically, S&P 500, gold and Bitcoin. That's a good portfolio long term. And that portfolio, I'm not really changing that much. I'm only changing that if it's obvious that we are no longer in a bullish market, which I don't really see is the case. So this is USD JPY right here. And the idea here is, of course, that we're going to see the idea here is that this long-term cyclical movement for USD JPY, this is basically an idea where I'm betting on more upside, okay? So I'm betting on the fact that this current range right here is going to hold like it has been for 2 years. I believe we've been trading within this range for 2 years, and every time we hit range lows, we have bounced and move at least towards up to range EQ and range highs. Now, if this idea fails, then we have a short target below at around 128. So that's the swing idea. Now, of course, we also have the opportunity to trade these macro moves or these long-term swing plays on the lower time frames as well, right? We can look at this as having a bias. I have a long bias technically on USD JPY. I know a lot of people would say that USD is weak. You should not be buying USD. Well, from a fundamental perspective, yes, I agree that the dollar is weak. Shorting the dollar is said to be the easiest play by a lot of fundamental macro-driven traders out there. I tend to agree, but I'm a trader trading on technicals, and so far that has worked well for me. From an investment point of view, though, I would not be long USD JPY. It's created a bit of a tension between my investment strategy and my trading strategy, but I don't make money following my emotions. Okay, I make money follow my system, which is very important to differentiate between those. We have a lot of questions on gold. Yes, we will absolutely be taking a look at gold shortly. You know what? Let's just go over to gold right away. You want me to look at gold? I'm going to be looking at gold. That's everything we want to look at. Anyway, let's take a look at gold right here. So what do we have on gold? Gold is currently in an uptrend. Gold is currently in a high time frame uptrend, a medium term uptrend, a uptrend on the weekly, uptrend on the 3-day, uptrend on the daily, uptrend on the 4-hour. We have I would say neutral on the 1 hour. We have a bearish trend on the 15-minute, bearish on the 5-minute, and we have a bearish trend on the 1 minute as well. So everything above the daily, including the daily, is bullish. We have the neutral sentiment. No, actually, the 4-hour is bullish as well. So the neutral sentiment to bearish sentiment starts at the 1 hour, which is logical, because you're not going to have like a switch happening on the weekly first. You will always have the first break of structure will always happen on the lowest time frame, and then it will translate over into upper time frames. The more development and the more time is spent creating that break of structure. So for gold right now, I would say that from an investment point of view, very long gold. There's no reason whatsoever not to be long gold. I believe gold is a fantastic thing to have in your portfolio at this time, I believe, to mitigate the risk of the geopolitical tensions, as with Bitcoin as well, I believe. Bitcoin would be a small part of the portfolio, of course, but there's the risk of not owning Bitcoin is bigger than having Bitcoin right now, I would say. From a trading perspective, I don't know. Same thing here goes with gold. So fundamentally bullish on gold, bullish on gold on high time frames. Now, do we want to short gold? Because it's, because we're feeling certain emotions. Because that's what we do. That's just everything we're doing, right? I'm seeing comments here like technically it shows downwards momentum. We have one comment. Danny saying gold is breaking downwards. Yes, but does that mean that it's bearish? Just because the price moves down, does that mean that it's bearish? Does that mean that it's time to short? Just because you have a bearish break of market structure on the lower time frames and price is trading downwards, is that really a reason to go short? Or is it a reason to wait for longs? And if I look at gold right here, especially on the 4-hour time frame, what I'm looking at is a retrace, a pullback in an otherwise bullish market. So that's what I'm going to be looking at today. So let's put the line chart on here. Let's remove some indicators on here. I'm also gonna go through some alerts here. I just had some alerts popping up, so I'm gonna go through the alerts. We had some at 8, 9, 10, and 11. Let us just go through the alerts here quickly before we move on. Okay, so we have the 1 hour. That's a bit late, right? Because we got one short signal here at about an hour ago on USD CAD. Look at the daily. Yes, we're at actually breaking below this level, which looks like a break below support. On the 4 hour, we have a sort of a break and retest like that. On the 1 hour, we have a bearish engulfing candle on the 20 EMA. Let's put the fib on here. This is the RLZ method system, by the way. If you're not familiar with that, I've covered it a few times in this live stream. Basically, what it's based on is having a break and retest of a horizontal level. You can see that right here. That break and retest also needs to happen on the 20 EMA, on the 50 EMA, or in between the area, inside the area between the 20 and the 50 EMA, preferably inside the reload zone or on the 0.618 as well. And the trigger candle, preferably also going to be closing above or below the 50. The 50% fib right here, and that's exactly what we're getting. Where would the TP be? The TP would be the FTA, which is supposed to be this one right here, the FTA. Where would the stop loss be? The stop loss would be above the reload zone, so the risk to reward is not favorable on this one. So that's not going to be a trade. Let's move on to the next signal. What do we have here on oil? We have a long signal on the 4 hour for oil. Is this a good signal? Not really. I think it's a late entry. Let's look at GBP CHF. That's a short signal. That's a good candle right here. We are below the weekly open, which means we opened strongly here yesterday. We're now below that weekly open. We have a break and retest of a horizontal level, kind of sits around this level right here, quite like that. What is the daily telling us? The daily hitting support right here. Okay, that's not going to be a trade. Right. Okay, so let's go back to gold. By the way, guys, remember to hit that like. You know that I've promised you a giveaway as soon as we hit 500 likes on a live stream. We were very early of getting that 500 likes last week. We were just like 100 or 50 likes away from that. So the more you hit the like, and the more we can get that like number up in the early session, the higher the chances are that we're able to push those likes higher throughout the live stream. So I'm seeing, as soon as I mention like the video, I see that like number go up. So I'm going to be mentioning that a few times throughout the live stream. Hopefully you're okay with me spamming that a bit. Okay, so Miguel, we're going to take a look at Euro USD quickly. Then we're going to take a look at GBP USD, and then Amal, you're very funny. I am also very pretty. Look at my face. I can also bring up the views. We don't need Anastasia and her knowledge. Actually, you know what? I'm very impressed with her analysis. Like every time she gets on and she kind of breaks down her volume analysis, like it really gets me thinking. I love that. I love that volume profile analysis that she does. I'm gonna be live with her tomorrow, and hopefully we can talk a little bit more about that. Okay, so EURUSD has broken above that local high right here. We now have higher highs and higher lows on the daily, effectively printing a very strong uptrend right here on Euro USD, which I really like. For a trade, let's take a look. Where are the that's a lot of things on here. Let's remove some drawings here. Yeah, if you're gonna come on here and advertise your tiny channel and try to get, unfortunately, you're gonna get banned. Okay. Here was something, says, looks like a bull flag, but smaller time frame showing more downside. Are we talking about Euro USD? What are we talking about specifically? And again, don't forget to hit that like, people. We're at 65 likes right now. We have 35 likes to 100. Can we get 35 likes in under 25 minutes? Can we do it? Can we get 100 likes in the first hour? Then we only need 400 likes. What is your analysis on gold? Let me go through EUR USD here quickly, and then we're going to go through GBP USD, and after that, we will take a look at gold. Okay, so, and I see also when I say hit the like, I see that the heart emoji is popping up here on screen. You're not supposed to be pressing the heart. You're supposed to be pressing the like. That's the thumbs up on the, that's the thumbs up on the page where you can watch the video. Okay. Now, EUR USD is trading in an area where we have not traded since the beginning of 2022. So a big move for EUR USD, a big cyclical shift, I would say, for EUR USD. We're now approaching a very important area, which is the 1.16. The 1.16 area for EUR USD is high time frame resistance area. I do expect some type of, like, I do expect the bears to kind of come in here and potentially defend this area for more upside. And but still, the trend is very bullish. The local trend is bullish. The higher time frames is bullish. We also have that idea of dollar weakness coming in. You know, we've had multiple investment banks like JP Morgan, Citibank, all the other fancy names. They're all saying like short USD. USD short is going to be the easiest trade of the year. And I tend to tend to agree, but also seems like a rather crowded trade, but it is an obvious one though. It seems like an obvious one, but it also seems like everyone just shorting USD. Like, what happens if there's no more sellers? What if we run out of sellers? What if everyone's just going to sell and then there's no one left to sell? Well, what happens at that point? Oh, when the market runs out of sellers, there's nothing left to sell. No one left to sell or buy, take the other side of that trade, which is a scenario where you most likely create accumulation ranges and distribution ranges. What's up, Fabian? Hope you're doing good. Welcome to the live stream. While you're here and while your name is on the screen, remember to hit that like so we can start a giveaway today. Let's go into the 50 minutes. Look at the lower time frames here for USD. I think, my idea with these live streams is to find trades that I can take live, and that's what I'm doing here. So sometimes the analysis will be a bit slow because I'll have to think. I'll have to think and I'll have to speak at the same time, talking about what I want to see here. So the thing that stands out here for your USD, if we're gonna get a pullback, the weekly open area here looks like a solid area. Like if we're gonna break this area, the weekly open looks like a solid area. But then you'll look at this on the hourly. It seems quite choppy. It seems like, at least for me, I'm not getting the perspective that I want here to be able to take a trade. But I'm looking at the weekly open area at around 1.153 as a probable support if we break down from here. And that's all I can say. I don't really have any levels of like, where should I manage my risk from? What's the plan? How should I execute this idea? Am I bearish or bullish on EUR USD? I'm not really sure. I'm more neutral when looking at this lower time frames intraday chart here, but on the higher time frames, yeah, absolutely. By the way, guys, my son made a drawing yesterday. Before going to bed, he made a drawing, and he asked me. He said, "Dad, why don't you show this on the live stream?" And I said, "Yeah, let's show it on the live stream." Okay, so here's the drawing. You can see. Let's see if I can get this in. Why is it not focused? Okay, there it is. Okay, so you see, it has two doors. It's like a 3D drawing. All right, so it has one door, this one, Okay, so I got that door, bathroom. The other room, the other door goes to a garage. Yeah. So now what I want you guys to do, let me know in the comments. Okay, I was going to ask you what you think this is, but now I've just told you what it is. But yeah, this is a drawing. This is a drawing, and it's absolutely fantastic, and it's beautiful. And he asked me to show it to you all. I've showed it all, and he's going to be super happy. Sometimes he's on YouTube, right? And he kind of goes through YouTube, and sometimes my face pops up, and he's like, "Oh, that's you." That's pretty cool. And now when it pops up, he's going to see his drawing on YouTube, which is it's a pretty cool thing. Okay, so EUR USD, we are neutral. I would say we're quite neutral here. Okay, let's go look at GBP USD. Let's look at GBP USD. Cash is selling AU option. Opinion. Okay, opinion. You want my opinion? Okay. Yeah, you can have my very, very not financial advice opinion. GBP USD. I mean, look. Let's first look at the weekly here. So we're gonna look at the weekly. Okay, we got a high time for breakout, just like with the EUR USD. I do feel, however, that the breakout move has already happened. The move has already happened. We have had a move up into high time frame resistance. And now on the daily, we're kind of consolidating here. The trend is not as strong. You can look at this as a strong move on the daily, kind of like a slow grind to downside here on the daily, and then another big push to upside. But here we're just in a range with, I believe, slightly bullish characteristics because of the fact that we do have the idea of higher highs and higher lows. We are right now trading below the weekly open. I don't really see any clear sign of strength right here. No clear strength on GBP USD. Actually, let's make a poll. I want to know: are you bullish or bearish on GBP USD? Yes or no? So you can go to the comments right now. I want to know if you are bullish or bearish on the GBP USD right here. Yeah, we are working on that. We are working on bringing more faces on this live stream. We're working on bringing lots of more people on the live stream. We're going to get people from within the community and from outside the community as well. If you're interested in joining, you can send an email to, actually, let's see. We have a new email. We have Ellis. That's right. And Ellis just sent me a voice note. I can't listen to that now though. But we do have Ellis joining us in the team. So we have Ellis, who recently joined the 5ers and the team here at the live trading room. So if you are interested in joining the live trading room and show us how you trade, or just talk about, I don't know, Lego, definitely an interesting subject. If you are like a Lego nerd and you have a lot of different Lego things to show me, we can take the opportunity to do that during the live stream. Maybe you want to talk about. Actually, you know what? Let's try to keep it trading related. So if you want to come on in and talk about trading, send an email to alice.g@the5ers.com. Danny says, "Can I talk about my losses?" No, never. Like it never. We don't talk about losses over here. We never lose. We only make money, right? We only make money. Now, of course, if I mean, if you only lose, then I don't know, but yeah. Of course, we're going to talk about the losses as well. That's just a big part of manage. What does yes mean in the poll? Bullish or bearish? Oh, that's a really good question. Are you bullish or bearish on GBP USD? And the things you can select from is yes or no. Should probably make a new one. 80% says yes. I like that. Okay, so let's just say that 80% are bullish. I'm pretty sure that 80% is around 75% of you are probably bullish on GBP/USD. I think this is a really boring market. GBP/USD for me, there's no trade. I think we need some volatility, right? So what I'm gonna do here is I'm just gonna go through this list. We're gonna do so on the 4-hour, and I want to see some type of volatility here. So USD CHF, nothing. I mean, the USD pairs are definitely showing, bullish momentum. Look at USD CAD has been breaking down here. Looks like it wants to go down lower, but we want something that's more clean, Euro NCD is interesting. It's hitting that monthly. It's hitting that monthly open. That's a good level. Let's remove all the green ones here. And we can start adding things to the green list. Okay, let's add Euro NCD to the green list. I'm going to go through the list here. Can find any opportunities. Euro JPY, I'm going to add that one because it looks like it could be a breakout trade. UPAD looks good for long. Good level for long. GB CAD, good breakdown. It's the daily telling us, okay, not much on the daily. GBP/USD, nothing. Add CAD CHF as well. USD JPY. What is USD JPY? That could be good for a breakout. Add that to the list. CAD JPY also looks good for a possible breakout. JPY pairs obviously very strong. Okay, now we get to USD 30. Nothing here. S&P 500, nothing. NASDAQ. Got nothing on NASDAQ. We got the dollar currency index. Take a look at the DAX. Nothing on the DAX. So I'm doing the scan here. I'm looking at trades where I can enter, almost immediately. Let's add that gold as well. We got oil, that gas. It's a big breakout on natural gas. Silver. Oh man, silver looks absolutely terrible. We got a Bitcoin. Bitcoin pulling back towards a low time frame support. I like that. Ethereum pulling back to low time frame support as well, looking exactly like a copy of Bitcoin. Let's go to the green list right here. Let's see if we have anything interesting here on the green list. Euro NCD. Okay, so Euro NCD looks like a good level right here, but there's too much space to the downside. So let's remove that one. Euro GBP looks like a good possible breakout. Go to the daily. Yeah, that looks like a good move here. So on the 4-hour, what I'm looking at on the 4-hour, I'm looking for breakouts. I'm going to be adding an alert here for a possible breakout on Euro GBP. By the way, guys, we're almost at 100 likes, so make sure that you keep hitting that like while you're here. It's not only will we initiate a giveaway when we hit 500 likes, we will also activate that YouTube algo with those likes, so we can get more people in here, and the more people we get in here, the higher the chances are that we're able to initiate that giveaway today. Okay, so on GBP AUD, I like the level that we're testing right here. Basically, this whole zone right here. I like this. Go to the 4-hour. Decent level on the 4-hour as well. It's the first retest. What about the daily? Do we have any news coming up for GBP AUD today? Got inflation rate tomorrow for the pound. Okay, let's look at the lower time frames right here. The 1 minute, that's a good reaction, but it's a little bit choppy. Let's see if we can look at the 5 minute. Quite like this on the 5 minute. We have broken above a descending trend line right here, and you can add the trend line so you can see what I mean here. Can I get this one right here? Could just be the fact that we're hitting the trend line here. Okay, so maybe not breaking below the trend line. Maybe we're just hitting that trend line right now, but we do have a break above that high. So the idea here would be to perhaps take a trade up to this level where we have that local, that lower, that lower low. That's definitely a swing point. So a possible trade would be to see this level breaking, and then looking for a possible breakout move up to that level right here. Could have fairly tight stops if we get that breakout. So I'm going to be adding an alert right there. All right, we're at 100 likes, so make sure we keep hitting that. Keep hitting that like. This is definitely a trade that I'm gonna be monitoring. Yes, it's. I mean, it depends on what trend. Is it against the low time frame trend? Yeah, currently yes, but if we break this high, then you could make the argument that the low time frame trend is no longer bearish. And if you look at the 4 hour, we're in range. The 4 hour is not really really trending. And then on the daily, I would argue that we're in an uptrend. So the high time frames is uptrend, 4 hour neutral, 1 hour downtrend. So yes, it's counter trend on the lower time frames, but still with the higher. Still with the higher time frames, and there's no trade. I have not taken a trade yet on this, obviously. Euro GBP pushing higher for possible breakout. The CAD CHF I'm just gonna remove from the list. This is it's not good. USD JPY. I'm just gonna keep that one on there because I have an open position on it. CAD JPY. Very, very strong. And there might be an opportunity to trade this at upside if we do get a breakout. Okay, what about gold then? Let's take a look at gold. But that was an important area for gold. We can see that we did create some type of structure around this area. We've broken below this level now. Let's see where we get the 50% fib. especially the 0.618 as well. Okay, so it looks like we did test the 50% fib here, or right about the 50% fib with the 50 EMA on 4 hour. So I'm not. Okay. Yeah, so like I'm not gonna comment much on the current situation, but we do have a post from Trump. I don't think it's a new post, but yeah, he Trump did say that he has not reached out to Iran for peace talks, but if Iran wants to talk, they know where to find him. So I don't know how to read that. And then of course we have the comment in the comment section that saying that Trump has said that Iran cannot have a nuclear weapon. Does this mean that the US is setting up to more actively support Israel in this? And when I mean actively, like putting the American military on the offensive. Now there's seems to be a lot of signs going either way here. And Trump is not really giving any clear direction on where he wants to go with this. So I think the market is definitely a bit uncertain here. There's no, and I can kind of feel that in price action as well. There's no super clear direction here. I mean, there's still dollar weakness. Oil is looking slightly bullish, so technicals are kind of pointing in the direction of risk off in the short term. But I think gold is bullish. I think this is an opportunity to. I think this is an opportunity to buy gold. From my personal perspective, not financial advice, of course, but I'm looking at this and I'm thinking that I do see a break and retest on gold. I do view this as a bullish break and retest on gold. Now we can of course go lower. We can of course go down to the 3,350 area before getting that move to the upside. A question. It's euro against USD. It's not possible that because of this situation, one currency will shoot indefinitely, but they move in a certain way that balances each other. It's not linear. Of course, nothing moves in a straight line to the upside. Of course, there's a market. You have buyers and sellers. It's never. You're right. It's never possible that the market is going to move in one direction unless it's Bitcoin. I mean, Bitcoin just moves up, right? It's look at Bitcoin on the high time frames. You basically see a move up to the upside. Right, guys, we have over 100 likes on the live stream today. Let's make sure that we get that like number up. And I'm seeing a lot of new viewers coming in to the live stream as well. Welcome everyone, and thank you for joining. If you're new around here, my name is Jonatan. I'm a funded trader and professional trader and market analyst here at The5ers, and we have a whole team of hosts hosting these live streams all the way from 8:30 GMT till 2? Is it 2 GMT? I think it's 2 GMT. Monday, Tuesday, Wednesday, and Thursday. a whole team of traders. So when you join here, you can make sure that you get the best perspective from their system's point of view. Rain BFX says that he is still bearish on gold. I haven't seen a break of structure on 15 minutes to signal bullish. Okay, Danny said Trump. We want a real end to war, not ceasefire. Where are you seeing this? Because I'm not getting the alerts for Trump's posts. Isn't he like he's supposed to be sleeping now, isn't he? BBC. You're getting it from BBC. Oh, that's a shame. Let's see. Like if it's not on Bloomberg or Financial Juice, then you know, where is it? Right. Okay. So he's in a call with a Saudi prince, and tweeting at the same time. Probably has someone listening in on a phone call and he's posting everything. All right. US 500. Let's take a look at the S&P 500. What do we have on the S&P 500 here? Yes, S&P 500 has reached daily resistance, high time frame resistance. Yeah, I mean, I am getting the comments that I have not reached out to Iran for peace talks. That I'm definitely getting that. So given the current situation, like I'm obviously getting increasingly. No, I don't have any. I don't have any favorite pairs. All pairs are my favorites. I think I look at everything. You know, I'm looking at all the majors, the minors, and all the crosses between them. I look at all the major indices. I look at Bitcoin, Ethereum. I look at all the top, let's say top 100 altcoins. Everything. Yeah. So Henry mentions euro entity. You're right. From a market structure perspective, it's definitely euro entity. So from more of a technical, educational perspective, I really do like euro entity because it has a structure, especially on the daily, where it has a very good market structure, and it has a lot of scenarios where you see very good. It's a very good structure where you can see a lot of accumulation and distribution ranges on your entities. From a more of an analytical point of view, I do like your entity. What's up, Louis? Welcome to the live stream. I know you probably like the live stream, but like it again. Like it again. Call your friends, invite them over. Like it. Call your mother. Call your dad. Call your grandma. If you have a dog, open up a YouTube account for the dog. Have the dog sitting. Buy multiple phones. Have the dog every time he likes on one of the phones, he gets a treat. You can have like a multiple dogs, multiple phones. Like a dog farm and a social media farm. You see those farms, right? Like Chinese farms. I probably not Chinese, maybe not even in China, maybe, but you know, in places where they have like hundreds of phones and it's like automatically. That's what I want you to do, but organically with dogs. Yes, Henry, it is ethical. Wouldn't really be ethical if it were children, right? Better to use dogs. We don't condone, animal abuse or anything, but they're getting food, they're getting water, they're getting everything they need, they're getting a place to live, they're getting love. What more can you ask? What more can you ask? You have to do is just like. Danny says, we just heard. All right, what's up, Pedro? Welcome.
Good morning, everyone.
Good morning.
Good morning. I was just laughing about the dog story. Yeah, we just
Yeah, definitely. Oh yeah, that's right, Vinicius. We have LG has a cat as well. It's not his cat though. It's his roommate cat, and that cat is like, it's not a nice cat. It's not a nice cat. Like, I don't know if you heard the story of him losing a lot of money on a trade because of that cat. So actually, that cat might actually be the perfect test subject for a potential like farm.
I do have cats, and I do believe that they'll be great traders. To be honest, I think the characteristic of a cat, they are super disciplined. They know exactly what they want. They can be patient. Like my cat, anytime he wants me to have a break, it just sits in front, right, almost on top of my keyboard, and it forces me to it just stares at me. It can stay there like for 3-4 minutes. I cannot even touch my mouth because it starts biting my hand. Like he literally just stares in front of me.
Man, I don't like cats.
Yeah,
they're way too they're way too aggressive, and they're just way too like. I don't know, man. I don't like cats. They eat birds.
No, they're cute. They're cute.
No, I don't agree with you. No, you know what? I definitely like humans more than I like animals. Definitely. And a lot of people say like I like dogs more than I like people. But how I don't know, man. Like that is a weird statement to make. Now I'm getting a lot of hate in the comments. They're going like, oh, cats, we love dogs. Yeah, but what about what about your family? What about your friends? What about humans? What about the humans? Can't forget about humans. Henry says, put some gold in a glass on the edge of a table. If the cat drops the glass, sell gold. How about just not have a cat? How about just not have a cat and then just buy gold anyway? Like, you know what I mean? Like, buy gold. Like, leave the cat alone. Just buy gold. Yeah, I don't know, man. I don't know. Okay, so we have a question. Okay, hi. You said you have years of experience in trading. What are your thoughts about this hype on the internet? People are hyping about their huge profits in 3-year stuff. I am always confused. Good for them, right? If they're able to post to make huge amount of money and profits in 3 years, yeah, good for them. Like that's great. That's awesome. I don't really know what else to say. There's of course a backside to that as well. You don't. Some of these trading influencers who like they can post like massive payouts and things, but you have to ask yourself like how many challenges did they have to go through to make all of those payouts and everything. Most of the time it's worth it though, because I do see, I mean, I've seen massive payouts like 40-50K payouts, like people can make a lot of money doing this, and if they want to hype that up on social media, good for them. But you always have to kind of be mindful of the fact that you can't really compare yourself to others on social media, right? Like if and it goes for every type, not only the trading industry. Like if you start comparing yourself to other people on social media, you're quickly going to realize that either you're just going to get depressed, or you're quickly going to realize that it's not that easy. It's not that easy. It requires a lot of job. But yeah, it all the hype on social media might create unrealistic expectations.
Yeah, I would even add, why are you confused about? Like, what is the source of confusion for you?
Yeah.
Just try to understand that. Is it because they're making money when they are still struggling? Is it because do you think it's not possible to make that kind of money without being kind of a scam, or what is that source of confusion for you?
Maybe he's confused that, you know, some people trade for like
1 year
6-7 years
30K.
before they get profitable, you know, and then like true profitability is not just getting a payout. It's about being able to get multiple payouts over long, like do it consistently. Like getting one payout is like, if you see someone just posting a one big payout, then ask yourself, how many payouts has he had in the past? Like what is the, like, how has he been able to do that consistently? But Pedro, I need to, I'm very short on time today, so I need to record a video. I need to record a video, and Victor is going to come in any minute. Are your connection good? Are you able to kind of take over and share a couple of shots while we wait for Victor?
I think so. It's not 100% perfect, but I think it's doable, and for sure I can analyze the charts and I can I can ask the guys
Right.
what is everyone doing.
Perfect. I will. And by the way, Rafael, we're not going to comment on other prop firms in this live stream. If you're having any issues with specific prop firms, you can reach out to them most likely, and they'll help you. But we can't help you on this live stream with issues that you're having with other prop firms. Guys, I will be back a little bit later in the live stream. I will also be back with Anastasia tomorrow as well, and I will be monitoring in the background, reading the comments. If you have any questions for me, just let me know in the comments, and I will see you guys a little bit later after recording this video and getting myself some lunch. All right, Pedro, take care. See you later.
Thank you, Jonatan. All right, guys. So now you need to add myself. There you go. Perfect. How is everyone doing? How is your week so far? How you guys are preparing for this important week ahead that are going to have so many big news with a Fed meeting, Bank of England, Switzerland tonight, or this night we just had also Bank of Japan, out uncertainty in the Middle East as well. How is everyone doing? What kind of trades are you guys looking for? So we are going to pay attention to some charts. So just share with me what kind of trades you are involved in. For anyone that was looking at gold, I think it was on Thursday when I was in the stream, for gold to break the 3,400 or something like that. So for anyone that was looking for those targets, congratulations, you guys got the target. Price indeed got to that level. Meanwhile, now it's moving to the downside. I do like where the high reacted. So yeah, we'll take a look at gold for sure, because you guys like gold. Amav is asking about, is it possible to sell the euro? Potentially. Yeah, we can take a look at euro as well. Amav, what levels are you looking for on the euro, so we can take a look into it? But before that, I think you guys were still commenting on the previous question. So we have here Tatian that mentions that I know some people taking huge payouts like 120K average consistently, and trust me, the pain they went through asking important questions and finding answers, that journey is worth it. And that's true. Like, that's true, because even if some guys are kind of flashing around with some payouts online and stuff like that, most likely they also went through the journey. Okay. Now there are some people that do indeed take advantage of the system of the prop firms, and they gamble, and they create kind of a way to try to gamble in between some challenges, and then eventually they get a huge payout. But meanwhile, they lose maybe 30 challenges in between. So they may still be net profit, but that's maybe not exactly the right approach to approach trading. Maybe to approach prop firms, maybe, but to approach trading long term is not maybe exactly the right approach. But most of them that are showing good payouts and stuff like that, most likely they also they are not just new. Right? They've been around for a while. They have been through the journey. They have been mastering their edge and suffering, and then going through all the challenges that basically every trader goes through. So that's important. What did Vinicius say? Trading should be with trader and not core sellers or YouTube content creator, except if you want to stop trade and start sell courses or be a YouTube content. Yeah, they're not trader. Yeah, like people sometimes yes, it's true that many people that actually share content online is because they have a goal down the line, which may be to create a community, or maybe sell memberships or stuff like that, or sell a course. Some others actually they may just like the idea of sharing. People do like also after they achieve a certain level, they also like to share what they learn, maybe try to help others. There's also some genuine people in there that like to do that. So yeah, it's both ways. Okay, Tech Tide mentioned I suggest $0 will reach previous day high, then you'll short for next many years. Okay, many years. Okay, that's interesting. Yeah, that just mention the levels and you can look at it. We can take a look at that. Trejo, what do you think about NASDAQ? I know that you like to trade NASDAQ. What is your take on NASDAQ and what can you expect on that? All right. Trade Joe also mentioned in here. Yeah, that's for a deeper conversation. So we go that into different time. All right, we'll go down more. We can look at that. Axel asking me what kind of trading do I use? I look at market structure basically, maybe including some support, resistance, supply, demands, but mostly I try to identify where I can see space in the market to try to take a trade. And I look at liquidity as well. I try to understand where maybe there's liquidity involved in the market. And I like to look for fresh levels. Okay, fresh levels can be those fresh levels of support, resistance, supply and demand, and so on. But I try to, yeah, it's market structure and something like that. All right, let's take a look then at levels. I'm out. That's euro, right? So let's take a look at euro. Before we look at euro, let's take a look at dollar index. Okay, just because of course it's super correlated. We did manage to break a low last week. As you guys know, we did manage to break an important low that was created 1 month ago. In my opinion, I don't really think that this low is the final low. I could see more downside. I could definitely see more downside on the dollar index. I'm not sure if this is the zone where price will stop and just start moving to the upside. It may bounce a little bit, but I would like to see dollar index moving a little bit lower, potentially before a bigger move to the upside. Let's see when that's going to happen. Again, this week you're going to have the Fed on Wednesday, then you're going to have more news throughout the week. Even today, I think is retail sales or something like that. So there's going to be plenty of news today as well. Even if price breaks a little bit above this top in here, I think there's maybe still some potential selling pressure. But let's see what's going to happen. To be honest, we do have a triple low at this point. I'm just not convinced with of this being the bottom on the dollar index just yet. Even on the euro dollar, I think price could still go a little bit higher. So yeah, we'll see. Intraday, maybe you can range. You can try to look for trades within this range. Even if price goes a little bit higher, maybe do have this next supply level in here. But then we start already having way too many highs in here, so maybe price may wants to go a little bit more to the upside and before finding any selling pressure. But yeah, intraday maybe you can still trade within this range all the way you want. Right now, price a bit in the middle, so I would wait for price to at least go a bit more closer to any of the extremes. Okay, let me just take a look at a few more comments of you guys. So, but yeah, bearish fair value gap possible on the euro at 115. Let's take a look at euro. Let's take at euro 115. What is that? 115. 728. 15, 7 to 8. What time frame is he talking about? One 15, 7 to 8. Is that where price already reacted from? Yeah, in regards to the euro, looking a little bit more into the higher time frame as well, and maybe can try to see another euro comments. 1 second, Trader Joe mentioned, I think it will be push up to reach some levels that price can push down in a big crash. Okay, so, Trader Joe, is that for NASDAQ that you mentioned? Is that your idea for NASDAQ to go higher and then move down before, or go up first before moving down? Okay, so who asked me this? What's the most valuable thing you learned from trading? To look at myself, that's a great, that can be a deep question. What was the most valuable thing you learned from trading? I think one of the main things that we learned from trading, and maybe then eventually becomes the definition of us being traders, is that we are in control. Okay, whatever happens, it's our fault. It's not the market's fault. It's not the weather's fault. It's not the PC. It's not the news. It's whatever it happens is our fault. Okay, and we are in control of the way we react to whatever happens. If you made a mistake, you are in control of how you react after that mistake. If you had a great day, you are in control of how to react after that. And if you had a terrible day, you are also in control. And you are responsible either for the good days, for the bad days, and for everything in between. So that's something that you can use it and implementing in your own personal life. And I think that's one of the key characteristics of a successful trader. Take responsibility for your own actions. You are the one responsible. It's not your mentor. It's not the market. It's not wherever is you are taking ideas from. It's you. It's not the broker. It's not the prop firm. It's you. Okay, or in this case, myself. But yeah, that's definitely a great question. We have in here amount when you trade euro, look at GDP as well. They usually move with some structure. Sometimes euro move it's confirmed on GDP. That's true, Tatian. You can indeed take a look at the correlation. Actually, recently the pound dollar and the euro dollar had been moving slightly different. So you can use also the dollar index as a sequence or another help for correlation. And I would even add that the euro pound can be a great pair as well to take advantage actually of that discrepancy that sometimes happens between the euro dollar and the pound dollar. So you can find some good opportunities on euro pound when there is that part. But yeah, the correlation effect. Gibran is mentioning market is sideways. Everyone is waiting for Trump to wake up and explain why he left G7 early. So the big news is going to announce. Yeah, let's see. Not really sure why he did that. Yeah, we'll find out about that one. So yeah, there's a lot of news, a lot of uncertainty in the market right now. Aside from already all the news that are scheduled in the calendar, then we had also the G7 meeting, all the conflict in the Middle East and so on. So yeah. 1 second, let me just read. Guys, more comments on the euro dollar entry for sale will be around 116. Okay, that's what you want to see. So let's take a look at some levels in here on the euro dollar. So TechTide mentioned that the potential sell in here on the euro dollar is at around 116. It's slightly higher. 116, 148, 116, 148. So that's basically coming back to the top again. And where will be your target on that one? You hadn't showed us a break of structure. 116, 148, somewhere in there. Yeah, maybe price already reacted from that level. Maybe already took the orders from there, and as he created a new supply level with this move. It did fake out slightly this top, so that's interesting. But yeah, another one, of course, can be maybe something in here. Maybe price already reacted for me, to be honest, this morning. That was maybe another level. After we break this structure, price reacted to this level, and we'll see if it continues or not. And the potential target, maybe euro dollar can get closer a little bit towards this next structure in here as a short. Yeah, so there's a few zones in here in between on the intraday. Maybe even this one can react as well. Maybe that one can have another touch. Maybe this one in here can have also another reaction from. Wait, not this one. So there are a few levels in here on the euro dollar that price can bounce and react from. Yeah, it depends on the time frames that you are trading. If it's more intraday, maybe you can find those opportunities. If you're more looking for a swing position in here, I think I need a little bit more confirmations before even taking another long or or a new short. Yeah, Pedro, euro will 1 second. Will sell to the lows below market. Okay, Tatian. That's nice. So where is your target? Are you looking for these lows in here, guys, for Friday lows, or you are just looking for these lows in here today? Today's lows, because yeah, today's lows I could see definitely price taking these lows in here. I wouldn't be surprised if price actually will do that. Question mark is from where it's going to do test this level and go down, or it's going to maybe go slightly higher. But I wouldn't be surprised if price actually does take these lows. Now, if I talk about these lows in here, yeah, that's maybe a little bit of a different story. We'll see. There you go, Trader Joe. Trader Joe, I'm going to save your comment. We're going to look at NASDAQ in a bit, okay? I'm going to save your comment for later on. Boom, boom, boom. Yeah, I'm saving your comments so you can read them a little bit when you're looking at NASDAQ. Maybe after gold, you can look at it. No, Dreamy, we haven't checked NASDAQ and the Dow yet, so we're going to look at it in a bit as well. What else? Sorfiani, it chooses Eurocard and Pound Aussie fearing breach my account about news. Yeah, sometimes that can help. You can indeed look for another minor assets to not be exposed to the dollar, and maybe you can find some good opportunities in there as well. That's for sure. I think I'll think about the swing short trade on the euro. All right. Okay, you are looking for this one. You are looking for the euro to go towards this level in here. Yeah, potentially. I could see that happening as well. I could see actually that happening after price maybe respect that level. But overall, in the bigger picture, I definitely will still like to see price going a little bit more to the upside. However, so when I'm looking at the dollar index, I would like to see price going slightly lower. When I look at euro dollar, I think I would like to see price maybe going slightly higher. However, when I'm looking at euro index and then when I start looking at dollar franc Swiss, when I'm starting to look at the dollar CAD, I can see some potential move or levels that, for example, euro index could have a bigger reaction up from here. So this was something that we covered last week or something like that, looking for that deep reaction of deep retracement to the upside on the dollar, on the euro index, and maybe from here we can start having some bearishness on the euro index, which could eventually push euro dollar also to the downside. So I'm going to be curious about that one to see if you're going to have actually some kind of a move like that, and as a nature, most likely euro can also follow that that path. But then we are looking at the other dollar pairs, and in this case, I'm going to be looking at dollar franc Swiss and even dollar CAD. I think we are kind of an interesting level that we could see some strength as well. Like dollar franc Swiss is reacting from this double bottom. We may have broken a little bit of structure in here, even though price may have got really close also to something in there. But maybe from here we could find some bullishness. So if the dollar index actually does want to go higher, I think maybe dollar franc Swiss can be a pair to take advantage of that, to position as long. We are going to have another interest rate decision on the Swiss National Bank on Thursday, so we're expecting to go to 0 interest rate. Interesting. But let's see how price may react from here, and if you do have a move like that to push higher. And also on the dollar, wait, no, this is dollar CAD. Also on the dollar CAD, I think price is finally reached an interesting level. So I've been going or moving to the downside for a long time, and now we are kind of finally approaching this low in here. So I could see, even though we haven't really had any proper break-off structure just yet on the dollar CAD, by break-off structure I mean kind of a move to the upside, kind of some proper break of a previous high. This was maybe the only one, but it's more of a trend continuation setup. That's quite normal that you see this pattern before price actually reaches the final destination. It kind of looks like that is breaking some structure in here, but then it's just to collect liquidity to continue. In this case, actually, it reacted quite nicely from this previous support resistance. But now we are approaching this level, and I could see some at least some reaction before price. Even if the idea is to continue and break these lows, we could before that maybe find some reaction, okay, some bullish trend in here. So that's another dollar pair that I'm paying attention to see if you do have kind of any kind of reversals in here. So that's a little bit of a few dollar pairs that I'm paying attention to see if there's any chance for the dollar to go up, and maybe then the euro also can go down as a consequence on that. Even lower, bro. Okay, TechTide is mentioning even lower. Okay, yeah, we'll see. We'll see if we actually go even lower. I'm just not convinced with the low on the dollar index, and that's a bit of a problem in here. Yeah, target was USD down to support. Okay, whoa, we are way lower, right? And it showed first reaction in yesterday's high. So we are looking for 1-0. We are going all the way down. Okay, you are pushing all the way to here. Okay. Boom, boom. We are looking 10178. Are you looking for this? Are you looking like literally to come back to test this year's lows? That's quite ambitious. Yeah, that's quite ambitious. Yeah, before that, I'll be looking for twist for price to feel some kind of this ranging here, and even before that, we do have this demand zone in here. So yeah, level by level, I wouldn't be pushing straight away already to go all the way there. I think that needs a big shift, and I'm not sure if the euro and the dollar already are reacting from those kind of levels to look for it. But that's a good idea. We'll see. I'll keep in mind TechTide. I'll keep that in mind. Euro is falling down. Dollar yen is definitely going long. So euro is on the good short side. There's no confusions other than the structure. Yeah, potentially when you're looking at dollar yen. So we had the BOG speaking this morning. Basically, they are going to take it slow in terms of the reducing the balance sheet or the money that they are purchasing bonds in there. I like this level in here. So let's see how price may react. Otherwise, you may continue to push down, and if you continue to push down in here on the yen index, then you're going to continue to push higher on the dollar yen. So definitely, I'll be paying attention to see how the yen index are going to react from this demand zone, to see if there's any kind of strength in here, or if not, if you start breaking below these lows, then I can see yen index going much further down, maybe all the way back to this 730, and as a consequence, yes, you're going to have dollar yen definitely moving higher. So that's something to pay attention in here. So yeah, that was a level that I've been looking for to see how price may react from here. So then when you're looking at the dollar yen, 1 second. But yeah, guys, I like your analysis. I like your ideas. Thank you very much for sharing. Okay, that's exactly the goal of the stream as well, is to hear your thoughts and to kind of discuss ideas, so everyone can benefit from it. Everyone can eventually, of course, make their own mind of what levels do they want to trade from, or what buys do they want. But that's actually the purpose, is to have these kind of conversations. So we do appreciate you sharing your thought process and your analysis with us. And with that, don't forget to keep pressing that like button, okay, and to continue to subscribe to the channel, because yeah, we do provide good value, and you guys also provide great value with the comments. All right. Okay, no, that's really satiric. That's not really set for the euro that down, because dollar is actually weaker. The second wave of long will happen once shorts are complete on the euro. Yeah, okay. Okay, so everyone that you see, everyone is sharing their thoughts in here. All right. I'll bet that it will take yesterday's low first on short term. Yeah, possibly. Possibly that's something to look at. On which time frame we will take trades? So I do my analysis on higher time frame, maybe 1 hour, 4 hour. I do pay attention to the daily as well. So I do go from higher time frame all the way to the lower time frame, just to create a good bias on which direction. Good morning, Victor. Welcome. I like your green top, by the way.
Hello, everyone. Yes, Green is the way to go as traders, right? How is everyone watching us today? We are coming in the second day of the week. It's a central bank laden kind of week, right? We have we had during the Asian session the Bank of Japan. I'm sure you touched upon it, Pedro. But we have later on we have the Feds as well coming in to tomorrow. That is correct.
Yes, it is tomorrow.
Yes, it is tomorrow. So it's going to be fun, and by fun I mean interesting. We have in the chat we have the regular bunch, right? Our great core of members, Manish, Louise, and so many others I can spot in our chat. That's makes me happy to see how we are. Yes, environmentally friendly. Yes, green is the way to go. Yes, for sure. I like that. All right, so Pedro, what have you discussed already before we continue further? I'll follow your lead to not have too much overlap into what has already been discussed.
Yeah, so we have been talking about. We started with euro dollar. It's been a great interaction between about the tech. What's his name? Tatian as well, and also tech trade. So we've been talking here to see if the euro is actually a good short or not. So I'm actually curious as well about to hear your thoughts, Victor, and if you actually have closed or not yet the full trade that you had on the euro. Are you still long? Are you still holding that long position?
I'm still holding the position. It is it's only a percentage, a low percentage of the whole position, because obviously I hit the intraday target already, and later on I hit the daily target as well. So I'm only holding up for the weekly target, which is at my target is at 116, a little bit shy of 70, 1670, shy of 70, I would say, below 70, couple of pips, and I'm holding a small portion of the whole position for that one. So to me as well, the majority is already out. I got my profit. That's all fine. But I'm still thinking there is that possibility of another leg up. The question is, when will that happen? And that's always the question, right? Whenever the market is moving in one direction, it's when is the next leg coming up after some kind of retracement or consolidation, right? It's difficult, but with technical analysis, you can get a fair idea of when that timing is, right? Timing is everything. So that's our job, right?
Exactly. So we have been talking about that one. Some of the guys have been looking for shorts, maybe from this triple topping here. I do agree that I'm still not super convinced on the top on the euro. I think maybe we can continue to go a little bit higher before having maybe potential bigger reversal to the downside. So we'll see what's going to happen in there. Same thing on the dollar index. I think dollar index could go a little bit lower. So they've been looking a little bit about at those pairs. I look at as well at dollar CAD and dollar franc Swiss. Potentially long opportunities. If the dollar actually is about to go up, maybe there's a potential nice long opportunity on the dollar CAD and dollar franc Swiss that they're approaching interesting demand levels on a higher time frame. So that's one that or a few pairs that I'm looking at. Then we still need to look at gold, as you know, everyone likes to for us to analyze gold. So we need to look at gold as well, and then also including the US indices that you can pay attention to. That's how we're going right now. Maybe you can share. Maybe if you want, you can share maybe your analysis on the euro, and then you can move on to the next ones.
Sure, let's do that, Pedro, right away. Let's do that. This is from a longer term perspective. I always start with the monthly. For those who might not know me, I mention that all the time. All right, so on the monthly time frame, what we can see is let me get these screenshots out of the way. On a monthly time frame, we are getting into a interesting area. Just to know, just 15 seconds on it. On a much higher time frame, we need to be pending of that possible reaction. We haven't seen it. There isn't any indication it will happen. But if anything, I'm talking about the next 2-3 months. If we see, before we validate this order block on the monthly time frame, if we see a very strong reaction, that could change everything, because the higher time frames would then signal us the monthly for a possible move to the downside. And that possibility is, while the order block is still valid, that possibility is still, even though it doesn't look like it could happen, it's still open, right? So which is what I mean is, there is an area, we are currently above it, but there is an area, as long as we don't close it, and we, at the end of this month, we might invalidate it. But until then, you have to take into account that we could, the sellers could come in and change things completely. And that is something which I don't talk about fundamental news, but we all know that there are quite significant events happening globally. So who knows? There are things that can be game changer in terms of the outlook, medium term, or maybe a couple of months looking forward. All right, looking at the weekly, this looks bullish as ever, right? This has been taking previous swing highs with very little difficulty. Not only that, it came back to retest it and continue. So this looks solidly bullish, meaning that monthly scenario, low probability scenario, I would say put it in the freezer, because the weekly is firmly bullish. And this is also, if you consider, for example, the fact that we have been created on the higher time frames, bullish structures after that breakout, but no bearish structures at all, right? On the weekly, that tells us that who is firmly in control, right? So that's where we're coming from, and that's what you need to guide your bias going from the top-down analysis. If we look lower time frames into the daily, of course, I'm gonna make my position here because it's not very important. My target is up here, which is based on the weekly chart. My daily target was already hit. This is TP2. Just for those wondering. So I'm still holding that position, as I said previously. Let me move this a little bit away so it doesn't obstruct us. What we can see here, if anyone, right, very quickly, do we see any top formation? At a first glance, even if we take out everything, does this look on the daily time frame that we are topping? What indications do we have of a possible top? Actually, let us know in the chat. I'm interested in your opinions. The same thing as Pedro said, right? This is a great place to ventilate your opinions, your biases, your considerations in the chat. And, it's not about being right or wrong. It's about opinions, right? Everyone is able to have them, and there's not a wrong opinion in here. But build your case. Why do you think this could be a top, or why do you think it isn't, right? Or it couldn't be? Let us know, because the collective effort of everyone, not everyone, but a lot of people doing that at the same time will help us, populate or organize our own thoughts, everyone in the chat, right? My idea here is, while I'm waiting a couple of seconds not to bias your opinions to be typed, let me stop for a couple of seconds, giving you guys time to put your post in the chat. I'll ask Pedro a question or two, a little chit chat, and I'll come back to the chat. Pedro, how is the sun in the sweet regions of the world you are currently at?
Yeah, it's in Lisbon. It's extremely hot, I have to be honest. So yeah, since Sunday, yesterday specifically, and today, I think they are the hottest days since I've been here. I don't know if you can notice my face, but I've been spending some time under the sun, getting some tan. Yeah, it's extremely hot, to be honest.
Yeah,
it's extremely hot. This was
that's exactly whenever I saw it, that's the first thing that came to mind. I see you have a nice tan. I said, wow, it's got to be very sunny there where you are. Awesome.
It is.
And I suppose a lot of the residents are looking for, the waters, perhaps beaches or terraces, and all those sunny activities, I suppose.
Yeah. Yeah, indeed. Dude, that's so June usually in Lisbon is a festive month. There is kind of a holiday. There is a Saint holiday that actually happened last Friday. But Lisbon kind of celebrates that for almost for the full month.
All right.
So there's been a lot of parties going on. But yes, the weather has been crazy. Yeah, especially now. So yeah, and I live nearby beach in Portugal, so it's perfect for me. So if you don't find me in the streams, it's maybe because I'm somehow on the beach or something like that. I'm just enjoying as much as possible because it's a complete contrast than in the UK, unfortunately.
Awesome.
That's the reality. Yeah.
Awesome. I was waiting while I was, catching up with Pedro's weather report from Lisbon. I was waiting for you guys in the chat to tell us, and the rest of the audience if the euro was kind of topping or not. But I look at the chat and there's nothing. What happened? You guys are still sleeping.
They're more interested about the weather.
Yes, apparently they're more interested in weather and where it is or isn't as hot. Well, anyways, then in that case, let me continue. Well, if you look at the daily time frame, we obviously you want to see how the market reacts to that. Of course, I have this TP line here, and that's previous swing high. They function as sort of magnet for price, right? Price, that's the reference points where price wants to go to. They want to either break it or be pushed at, change direction at, reverse at, etc. So the first thing is to look what does the market do in terms of price action once it approximates and or breaks above this line, right? On this time frame, the daily, the weekly we already analyzed, and it it looked as bullish as as can be, as I said, right? So if we see it at this line, which is that previous swing high, we're not talking about the weekly level here, which I discussed before, but the daily level here, we had on Thursday, we had a close above it, right? For a lot of people, that means it's broken, right? Because it's not only a wick, but actually a close, which is a much stronger indication that that level has been conquered. And now this next thing is, can we hold it? Can we defend? Can the price hold itself above it? Even if it loses that level for a couple of candles, doesn't mean it lost, the whole war or the whole battle, whichever analogy you want to be using. So we did have the close, and we are currently below that level. So it is in a way we are in that point where we're pushed back a little bit. Steven says, stop your discussion, Jack Gold. Is there something special happening, Steven, on gold that we need to urgently look at gold? Let's look at gold. Let's see what Steven is talking about. What is it, Steven? Let's see what Steven is talking about. There is a bearish order block on the daily time frame. That's very nice. Is that enough to trigger us into anything? Look at that beautiful reaction from that order block right there. I like that. I like that a lot. Anything else? Not really. I would say we do have a fresh order block, although it has been stretched out a little bit. Yeah, I don't know, Steven, you be the judge, but I think there isn't anything urgently to be watching here. Yes, I can see maybe this is what Steven is trying to help us with. I do see that breakout, and if that's something you trade, then of course this is something very, very interesting for you. Yes, exactly. On the 30 minutes, I can see that. This is nice. Thank you, Steven. Thank you for your cooperation, your your input. I really like that, keeping us on our toes with the latest chart or latest asset developments, especially in gold, which is very popular. On my side, I do like, if I have to, before I switch back to EU, I do like that daily, that H4 reaction we had. But it isn't exactly like, let me see. Actually, that's on the 1 hour. So we do have a retest of that order block, and it is looking very nice. And if you go to the lower time frames, we can try to see, yeah, this is very powerful. This is looking very, very nice. I like that. If I were to trade this, I would be I would base it on an H1. It's not an H. It is an H4 as well, actually, to be fair. Let me mark it as well. Yes, this is a valid entry. This would be a valid entry for me, right? This is the area, which is let me refine that with the 1 hour, which is, yes. So this is it's an inverse area, meaning that the H4 is actually refining the H1. So I'm going to be using the H4 in this case as the area. And this is looking very, very powerful. And on the 5 minute, this is the neckline here. So we did break it. I would be waiting for price to come back to something. I don't see anything right all the way. The only area that I see is on this time frame is this for the 5 minute, the 3. Let's see. The open, close. No, it's for the 3 as well. It's up there. And for the 1, I would say it already happened. Right? So if I were to be watching, wanting to get an entry, this would be the break of the neckline. And I don't have any structures in here to trade. But this is the area that I would be wanting to trade, even though there isn't an entry order block on the, but I would be looking for something like this, right? When the market comes back to that order block and then pushes away to enter, which obviously I didn't, because I wasn't watching euro, gold, that is, not euro. But this looks it is breaking structure. For those who are swing traders, you could easily enter this on a higher time frame, waiting for price to come back, maybe to touch this order block again. Maybe it will, right? With a limit order. I typically don't trade that way, but I mean, if you have a wide stop loss, it's more okay to use either the whole area or that swing low we had earlier, and then target that continuation as a swing trader, right? Target the previous high and perhaps some structure in there right before front running that. That will be something nice, I would say, with a limit order, which makes more sense to me, because not hoping, but betting on the fact that the market at some point might retrace into that area again, and then you'd be entering at a optimal place. All right, let's go back to euro dollar. Thank you. Who was it? Stephen, for your tip right there. Hi, Vinicius. How are you doing? I'm doing fine. I hope you're doing good as well. All right. Let's see. All right. So yes, on EU, what I was saying was we were on the daily time frame, and what I was saying that we need to watch, if you want to understand what price action, how to dissect what the market is trying to do, or what is the narrative of price action, or the collective market participant at any given moment. You have to look at the reaction, the behavior of price before, during, and after it reaches these key levels. One key level is, of course, that previous swing high. So if you look at this time frame, what can we say? Can we say that the market has rejected breaking this line or this level? I would argue it hasn't, right? I ask you guys to give your input, and that didn't work out that well. But I would say that it hasn't, right? Because we didn't get any bearish order blocks in combinations. We didn't get like a this on its own. Like if you only consider this looks a little bit bearish, right? Especially with all the whole wick outside of that line, but that's too weak, too little. Not only that, it is within the previous candle, right? Basically, you have inside candles being created here, right? What does an inside candle tell us, right? This one is the inside candle, right? It tells us that the market is not losing ground. The market is consolidating, is compressing, but in any case, it's not breaking down, right? So to me, there isn't anything visible on the daily time frame yet that tells us that we're topping. I would say no, we're not topping. That doesn't mean that the market can still, have some retraces, maybe even break a little lower before continuing. But currently, it's not telling us anything other than it's getting ready for its next leg. When will that happen? It's you tell me, right? There's no way of saying that in advance. The only thing we can use is the price action and indicators and candlestick combination to get an idea, or are we getting closer to that moment, or are we getting not further away from market continuing on that leg? I would say it, but in any case, this is not telling us it's breaking down. So let's look at the lower time frames, the 5-minute. Tell me, guys, do you guys see a reversal here? Look at this H4. Is there a sign of a top? I know it sounds at the tone, my tone already, it's a rhetoric question. I don't see it, right? You can see the impulsive move we had to break through that level, and that impulsive move hasn't been negated, right? We had a very healthy retracement, and from that point on, what do we have? We have regained bullish, market structure, making higher highs and higher lows on a much granular level, and this bullish market structure hasn't been broken by any stretch of the imagination. So I would say no, we're not topping, right? So I'm looking for where is that possible continuation coming from? Is it going to come from current levels, or is it perhaps still needs to go a little bit lower, maybe into that order block before we can find that is to be seen, right? It depends on future data which we don't have. Maybe tomorrow with the Fed policy, that would give us some idea, or perhaps some other geopolitical events coming up. So if I would say today, what we could do is mark the order blocks, even though this is not, is this fresh? It is 6 on the 7. It needs to get there. It seems to me like it has difficulty getting there. So I don't know if by the time it gets there, it's still fresh. But we do have, look at that overlap. That tells us it's catching back that bullish order flow. And we need to, we need a good indication would be a bullish order block being created in here with or without the mitigation of that order block that I indicated here with the arrow. Once that's done, then we can get an idea that we're getting ready for that push to for a higher place. But this can continue for some time. It doesn't have to mean we're going necessarily any place yet. But your first indication is that the H4 is changing direction. Let's see if we can spot some quasis. How's the Portuguese community coming along, Pedro, with the quasis? I see you guys are very very active with the quasi. I suppose the community is really likes it.
Yeah, I mean, it's a pattern that I also trade. So that's a topic that we have covered several times during the live stream. Even the other day, we just published one of the videos more specific about quasi, and actually this Wednesday they're going to do another one. Actually, I'm explaining exactly the 5 type of strategies or executions that you can find within a quasi mode of formation. At least those are the 5 ones that I try to look for. Each one is different in terms of what type of targets I'm expecting, what type of entries that I'm expecting. So managing expectations is quite important, but it's all the way from the potential creation of a left shoulder, potential creation of the head of the pattern, even then when you do break structure, potential retracement all the way back to the right shoulder, and then the potential threat from the right shoulder, and then the potential continuation after we do break new structure, and most likely price will start a new trend. So yeah, that's basically everything almost I'm looking for when I trade. And the advice is basically when anyone is trying to define a pattern to trade from, try to go deeper, try to actually reverse engineer every single step of the pattern, and try to find what kind of opportunities you want to look for. Because if you're looking for A, B, C, D, whatever movement that may be, maybe you're looking for the move from C to D, and maybe that may not happen that many times, or maybe you actually, let's rephrase it, maybe the most common trade is the movement maybe from C to D. That's maybe what you see online, and maybe that's the most common trade that you can find. But maybe your edge is actually maybe try to find the movement from B to C, or from A to B, or whatever it may be. So if you do reverse engineer, maybe you can find some sweet spots, some trade opportunities, and some edge within that pattern in there. Yeah.
I would say amen to that, because in my case, the head and shoulder pattern, the textbook example is to wait for everything to form, the left shoulder, the head, and the right, and then for the formation to completely, right, to actually complete, and then you start getting the entries for the size of the formation, flipped on the other side as a projected. If I might, for those who are wondering what is Victor talking about, right? So you have something like this. And the textbook example, this is of course a head and shoulder where there's a lot of symmetry, and the idea is that right, that is the completion when we get back, when after creating that right shoulder, we get back to that shoulder line where we a baseline of the shoulders where we actually break. That is the moment that the classical example or textbook tells you to start looking for the entry, either with a stop order before it breaks, or after, perhaps with a limit order on the lower time frame after it breaks and then comes back, right? Something like that. And you want to be getting into, let's say, something like that. And whether you have a tight stop or not, that's for preference of your style. Whether you put it all the way up here or above all those are variations that each trader has to figure out for themselves what they trade. And the classical is that we take the whole size of the structure from the pattern, and we extrapolate that same size for a possible target, meaning something like this, right? So that's the classical way of doing it. So you wait for the head and the right shoulder to form. However, that's exactly, and what I'm trying to say here, that's exactly what I did, Pedro, and about this, of course, is that I'm not trading it the classical way. One thing is, I'm not trading the head and shoulder, I'm trading the quasi for once. And two, I'm not trying to get in after it completes, when it gets back to that line, but of course, I'm trying to catch the reversal from the creation of the right shoulder. So that last leg, but there's so many ways to trade this. You can do it the head, as you said. You could be trading all of them. Having a action. action plan for each one of them, right? I used to do that, but now I focus on only one leg. I used to trade, the different, even I used to trade, for example, this part as well as this part, and then I get my entry for the last part. So three different, entry strategies within the same pattern. And nowadays I'm only trading the last one, just for efficiency, and it gives me enough opportunity to capture what I want to capture in the market. But I really like the idea of.
Yeah.
Go ahead.
Sorry, yeah, that's what I was about to say. So basically, what you described there, if you kind of Control Z just to bring back the drawing that you did. Yeah, basically the last one that you meant, that like the first example that you mentioned out COVID, the phase 5 kind of the last entry, which was kind of that completion of the head and shoulder, traditional one of after breaking structure, and then it's exactly what you mentioned, like either trading the head or trading the retracement. Like one of the most important things, and people are going to then realize, is managing expectations. In terms of even targets and so on, because for myself, I do like to trade the head. That's something that I like to do. I like to trade the head. The right shoulder is something that I do also trade, but yeah, I do also trade the right shoulder. But then I like to wait for confirmation as well, and so on and so forth. But it's important to know the expectations, or to understand exactly what to expect on each one of the phases of the trade. Because for example, if you're trading the head, and then price already breaking structure, kind of is making that first arrow down move that you draw in there, you may be start being greedy, expecting that, okay, now price is actually just going to fall all the way through. But in reality, if you are really expecting the Quasimodo pattern, some kind of reaction like this, there is a likelihood that you're going to have that retracement. Like, and maybe you don't want to see price coming all the way back close to your entry level. Maybe you can even get out at break even if you put your stop loss at break even, and then you do miss all the move to the downside. So if you are expecting this kind of pattern, maybe you can actually be a bit more aggressive on the first target that you are taking from the head, and then wait for the second entry on the right shoulder of the trade, and then maybe you can capitalize on both scenarios. Yeah, it's just, again, that goes into expertise, that goes into studying exactly the type of pattern that each one likes to trade, and managing their trades and the expectations like that.
And understanding the pattern, I think is a great way to manage your expectation. Exactly what you said. Because if a lot of the times when the head, this leg is formed, it is quite impulsive, quite explosive, right? Either to the downside, to the upside, and it is so easy in this first leg to think that is the move, and I just have to hold on now. It's so easy to think that, but the reality, and sometimes it does happen that there is no right shoulder, the quasi isn't formed, there isn't a head and shoulder, it's just one, fall from the sky, basically. But those you have to, for your asset, and this goes for the viewers, you have to check for your asset, for your time frame, how often does that happen? It's not very, very often, right? So a quasi is much more often where it comes back, and it forms that right shoulder, right? If you have that information, the statistics on the patterns, you will understand it doesn't make sense to always 100% of the time think that this is going to happen, because that's a low likelihood way of moving of the market, right? It's more likely to come back and make a second push before, and sometimes even multiple pulls. Sometimes it does this, right? And these can be quite close to each other. And if you gotta note how often this happens, in order to manage your expectation. Because if you think, okay, this is going to fall from the sky, but it comes back and retraces 75% of this move, you might close your position thinking, the pattern is not there because it's doing this. Meanwhile, it's just doing natural stuff. Just score how many times this happens before it reaches a significant level here. That could be something on the higher time frames or whatever. But this discussion is, I think, very, very insightful for those who are interested in trading patterns, because when you get to know one pattern inside out, decompiling it, you understand all the nuances of the different entry moments, and there's so many things you can do. And I only trade the quasi. I don't trade double tops. I don't trade any other formations. Only the quasi, and I'm only doing a portion of the quasi. Like you're talking about all the other entries, I'm only doing one, and with that, that's already handful for one person, for one trader. Let's see. We have gold spread commission. I don't know what it is, but I do know, I can say confidently that we have the best spreads. I challenge you, or I invite you to check our spreads, because they are really one of the best, if not the best, in the industry, offering you all these on all assets. Maybe not on crypto as much, but everything else we are probably the best, if not the best. Yes, this is the quasi Amirovsky. This is indeed the quasi. Someone asking about someone is sensitive about masks. Perhaps you have a traumatic experience with masks, and you don't want to see the mask at all after the COVID. I understand that. That's fine. Thank you for sharing your experience with masks, but a mask is just a mask. All right. What else?
Yeah.
All right. So
I think you could, go ahead. Sorry.
Go ahead. Yeah.
No, just
how often?
Yeah.
Go ahead.
No, sorry. Just finish this question, and then I can jump into NASDAQ, because Trader Joe as well has been mentioning in here NASDAQ, and I think we could look at NASDAQ after this. But yeah, just finish this question, and then we can jump into NASDAQ.
Sure. How often the 5-minute chart respects quasi? All of them, all of the time frames, it's relatively the same. What you will find is that the probabilities of a quasi being respected depends on how bullish, how much momentum there is in the market. When there's a lot of momentum, it doesn't respect, any structure in the opposite direction will get blown away. Even if they're quasi, if they're perfect quasi, they will be let me put this way, right? So if you have a market that is strongly and actually this is not as strong, this is just bullish price action, compare to something that is going like so, right? And how you can measure how bullish a market is by measuring the retracement, how deep the retracements are, right? The shallower the retracement, meaning the more momentum there is, the more speed there it is, the rate of climb is higher, the less likely structures, reversal patterns here and there will hold, right? So, I mean, on the opposite direction, right? So, meaning something like this. If you zoom in, if you have a lower time frame structure, let's say something like this, either here, right, or even on the lower time frame in there, they will obviously, because they're a lower time frame, this is one of the biggest factor in assessing the probabilities of any formation holding on. It's the general. That's why you need to master, you need to have proficiency in top-down analysis, because what's happening on the weekly, the monthly, the daily will decide if the H4 order block or quasi are going to hold or not. Right? You can have the best, most perfect, structures on the lower time frame, but if the daily is on a momentum in a breakout, let's say, it's not going to respect them. So I would say you can't this question you can't say like one number, because it depends on the higher time frame. It depends on the market structure or what's happening out there. The best way, and this is what I do, and I'm building a course on this, which will be on ABL, our free community, free educational community. The way to do this is to use top-down analysis, use alignment, and use objective ways to score, assess the higher time frames to increase the probabilities to identify which structures, when to trade the quasi, when to expect expect more from the move, and when to expect less. Because it's one, you can just take one thing, whether it be an indicator, whether it be a trend line, whether it be let's say EMAs are indicators, whatever it is, a structure or a candlestick combination. You can't take just one thing and think it's going to have a fixed percentage of chances to succeed, right? Because it fluctuates. It depends on what else is happening around it, right? It's part of a bigger. It's a little part. It's as the fractal nature of the market. It's a little part of a bigger development, right? So the best way to do it is to consider everything from the top-down analysis, using momentum, using structures, going all the way down to the relevant time frame. And then you can say, okay, this is the place, this is the order block, because you're going to find order blocks all the time. But that doesn't mean you have to trade all of them. Not all of them will have the same probabilities, right? So the trick is into identifying which one. Same goes for the quasis as well, right? The trick is to identify which ones are the ones to be traded and which ones are not so great because of other things that are happening at that moment as well. All right, so let's see if we have any other questions.
Yeah, we can jump into NASDAQ. Just to trade you. I'm just bringing here some comments in here that we have been looking at the specific levels. Basically, we've been talking to see if you should be looking for shorts or not on the NASDAQ. I'll just bring my screen in here.
Yes, sure. Please do that. Yes,
yeah,
where's the message about the levels? Okay, I think it was that one you had before.
Yeah, I think there are a few comments, but yeah, I think it was that one. Just to finalize in terms of the previous question that you just answered, a simple thing to do is first and foremost try to find a good level on a higher time frame. Again, order block, supply, demand, and stuff like that, at least 1 hour, 4 hour time frame, and then try to find that quasi mode within that level. I think that helps to increase most likely the winning percentage of the pattern. One of the hardest things, especially in the quasi model, because when you're looking at the quasi model, it's kind of price breaking structure, either up and down, kind of both ways, and can create always a bit of confusion if you're actually looking for shorts or longs, if you don't have a good base of where price is reacting from. So you may think that's a short, but then actually the breakoff structure, it was actually maybe for as a bullish and not as a short. And if you don't have a good understanding of maybe the direction and which level price is reacting in a higher time frame, that can be tricky. And if you do see actually, let's pretend that you have a supply and a demand zone, and then price is just fluctuating in the middle. In the middle is when those patterns tend to work the least. Just called like that. Like that's usually when price don't really work or the patterns don't react as they should, because price is just creating manipulation, just breaking a high, breaking lows, and kind of just ranging in between in the middle until it eventually gets to the levels where it should, and then you find it much better in there. So yeah. Find fresh levels and trade the first time price is reacting to them. Find the pattern and go with it. But yeah, so when you're looking at NASDAQ, So we basically NASDAQ retraced all the way back to the top from previous months, and now it's reacting actually from a nice supply. But before we look at the NASDAQ, I have the VIX chart in here. This was something that we talked about last week when the VIX was approaching this 16.30 or something like that, like when it created in here at this low, because it was a fresh demand zone, maybe order block as well, and I was actually expecting some kind of reaction in here. There was maybe initial level that I'll be interested to see if price eventually would respect and continue to move lower, or if it was about to break, maybe we get into this 22 mark somewhere around here. So it was interesting that whatever happened in the world, whatever happened in the Middle East and stuff like that, it actually coincided with the VIX reacting to or approaching this level on Wednesday to Thursday, and then whatever happened between Israel and Iran, it happened kind of after that, and you had the increased move to the upside in here on the VIX. And I'm looking at the VIX because usually when you do see an impulse move to the upside, basically increase of volatility, of uncertainty, that usually tends to be a negative reaction or a bearish move on US indices. So, and I've been talking about the VIX as well, even in this streaming here several times. Initially, it was actually when price got to this low in here, and now kind of a little bit around this level, because it's a great asset to look at correlation to then find opportunities on US indices, or at least some certain confluence that you can look for. So there you go. Now VIX is a bit in the middle, so we'll see what eventually is going to happen. Maybe this can be an interesting structure if price actually wants to go down or not. But now we are definitely now a bit more within this range. So that initial move already happened, and that's maybe an opportunity that that you could have had to short the US indices. Now when I'm looking at NASDAQ, I think with the conversation with Trader Joe, it was to try to look for some potential shorts at around this 21,970. I think that's the CFD prices. I think that relates to 22,000 in future prices. So depending if you're looking at CFDs or futures, the price maybe different. So as I mentioned, NASDAQ is reacting. So basically this rectangle that I have in here is the last supply, looking at the higher high that we have on NASDAQ from a few months ago, and price already reacted from it. So it made the full retracement all the way from 1 month ago, 1 month and a half ago, full retracement to the upside. So it's back at the close to all-time highs, and you are starting to see some reaction. Just waiting for my chart to load a little bit in here. Okay, while it's loading, something that happened on Friday, we had this initial move down. Okay, that was basically when the situation in the Middle East started to escalate. However, from at least based on this pricing here, we didn't really manage to break this low. I'm still waiting for price to load, but it still works. So continue. Price haven't really managed to break this low. There you go. If price had broken this low, at least on this data feed, I'll be maybe a bit more bearish, but I do still like, so I have this in consideration that price never really managed to break this low to open space to go further down. However, I still like this stop in here. Okay, so whatever levels or this high in here, I still like it. This is a great level to kind of be faked out. This stop in here potentially can even end up being in a Quasimodo shape as well, or maybe. Yeah, maybe actually I can ask you, Victor, for your Quasimodo to play out, would you like to see this low as well being broken, kind of to see this kind of a move, maybe this low being broken here to open up the door for a potential Quasimodo, maybe using this left shoulder or whatever left shoulder you want to look at as a reference, or not? When you're looking at your NASDAQ, which low would you like to see to confirm a potential Quasimodo in here, or that already happened?
Let me check the time frame you're on, the 1 hour.
Yeah, it can be 1 hour, 4 hour, can be any of those a little bit higher time frame patterns. And while we check, so what we have in here more recently is that yes, price did fake out this level. It's still reacting from this kind of supply that's in there. That's nice. Maybe price can even go a little bit higher. But something that just happened right now, which is why we were in the stream in the last minute or so, is that price actually managed to break a little bit of this level in here. So I actually like that. I like that price managed to break this because I could see now price faking out this top in here, while many people may be attracted to short already from here. I'd like now price maybe to come into this supply level. It looks a really nice level with these highs in here to trap, and maybe can actually have this opportunity to move to downside and be getting closer again to this range in here. So that's definitely something that I'm looking for. I think Trader Joe is similar. I think looking at around this level in here, and I do like the fact that we just broke these walls in here. This actually kind of reinforces my idea to even short from this level. So I do like that. Just to finalize, because Trader Joe did mention one last thing in terms of something, which is, I think he mentioned, yeah, 1 second. If we do lose, okay, I think he mentioned 1 second. If we do lose 21,750, which is 21,750, yeah, maybe around this level. So he mentioned that if we do go below this level in here, we may even go straight away to downside without price retracing, potentially. That could happen. We'll see if price actually still retraces back to this level or not. But that's where I want to be participating on this move, somewhere in here. But yeah, Victor, tell me, which level?
Yes, well, yes, I will tell you what level I would be. Let me switch to mine. In terms of the lower time frames, like the H2 or H4, we already have a quasi. At least in my definition of the quasi, very objective. We already have a. But with my definition, right, with the way which is quite sensitive in the sense that I can have a quasi quite quickly. We had earlier already. We had this is not the first quasi we've seen on the H4. We had one as well as let me see. I think no, we had one before that was on the. This is the H2. That's what I meant. Okay, so before this, just to make my point, we had another neckline which is the same head neckline here as well. And obviously, if you have a neckline already up here, then all the other ones don't matter once you break that. But we have had before, and that was what I was trying to indicate. Here we had a quasi with this being the head, that being the quasi. Is that correct? No, that's not a quasi either. In any case, actually, I was gonna say we had a previous neckline, but we didn't. In the way that I break down current situation, we already had a quasi here, but the in the extension of what I said earlier, if you want to identify the proper one, the best quasis are based on something on a higher time frame. So using only this time frame, you will get good trades. No question about it. You can be profitable, but the best way is to look for a higher time frame, because the higher time frame, in the end, the price will react to that higher time frame, right? The actual reversal coming, right, will happen at something that makes sense on the daily as well, for example, right? That would be the next logical time frame to look for. And on the daily, we don't have a break of structure yet, right? So that's one thing. It hasn't broken yet. And do we have a daily quasi on the to identify a possible? Let's see if that's the case. We do have a couple, 1, 2, 3, 4. To me, that's not too much of a too many entry order blocks on that quasi. So I don't, even though we do have a quasi on a much bigger scale, I don't think it's very useful to use these order blocks that emanates or emerge from that structure to the left to pinpoint where is the reversal likely going to happen. So I don't have any structure from the left on the daily, and on the current time frame, we haven't broken structure. This is the daily neckline currently. So to me, we haven't broken anything. And on the lower time frames, because the neckline depends on the time frame, of course, right? If you go lower, you will find reversal patterns that are visible on that time frame, let's say on the H4 or the H1. But it's important to recognize, put the right level, the right tag or label on the structure. What kind of structure is this? Is this an H1 reversal, or is this an H4? And H1 has its weight, of course, right? So the daily doesn't have that yet. We haven't broken any structure. The 4 hour, though, we have, but we don't have any structure, at least to define an entry, right? We already had a, let me indicate this, right? From the head, it didn't leave any structure on the H4, right? You gotta be specific with the time frames, with the signals or the structures, because they are time frame specific. This is the head, and that would be then the left shoulder. We haven't left any structure to trade from based on the H4. Same thing goes with this high. There is as you can see, there are entry order blocks, but they're on the H2. The fact that we don't have a daily, we don't have an H4 with valid entry order blocks, to me is that the possibility of a reversal from here are still kind of low, meaning it's I need to see more in terms of this quasi before I can start thinking, okay, this is actually going to make a move quite bigger to the downside. It's not clear to me yet. We have an H2 order quasi, which is good. I would trade this, right? You can see how the market creates that same neckline on the H4 is also valid on the H2. You can see this will be the left shoulder, the head. It breaks the neckline. It comes back, but it doesn't reach that order block, right? This entry order block, it hasn't reached it still. It goes on to continue, and it comes back, and before it invalidates, without invalidating it, it reverses, right? That would be the area that I would have entered, because this already happened. Right, so you can still trade them, but it's not a understanding that there isn't a lot to trade on the H4, and certainly not on the daily, will tell us that, whatever you take here, I wouldn't, think it's going to go way, way lower. Perhaps just target the next structure on the same time frame, which is this. And if you really see some momentum coming in, you might perhaps target this or one of these swing lows. That's managing your expectation based on the time frame that are giving you these patterns. But I hope that answers your question, Pedro. So on the H4, we do have the neckline you asked. That's this neckline.
Mm-hmm.
I do consider that already a break of structure on the H4, but the H4 doesn't give us any structures from which we can define our risk properly, which is necessary in order for us to actually take the trade. So I would say there is a break of structure, but it's not adequate. It's not ready. Perhaps that tells us something about the matureness and the maturity of that reversal. Maybe it's not going to happen, right? So that's something that. So I don't. The first time frame, the highest time frame that is a clear quasi with entry order blocks, that's the H2, which is not.
Yeah, that's
high
basically
enough
what I was trying to. Yeah, that's basically what I was trying to ask you, in the sense that one second, let me just add my chart in here again. Basically, as you mentioned, yes, there was potentially this initial quasi mode after the break of this structure here, which maybe the entry could have been around there, and there was a clear supply there that price could have reacted. We have many left shoulders in here, so that could have been the first trade, and price reached the target. Basically, that's a little bit of my question, is if this flow in here had managed to break some kind of structure or not, or if that respected this previous one in here, and it may have respected. So that's why I mentioned that if you had managed maybe to break this below this low, I'll be a bit more bearish into what I was looking for. So I think there's still possibilities within NASDAQ that we can trade and maybe range in between this level in here, but I'll be, of course, much more bearish eventually when we do break below this structure in here. But intraday, I think there is. I like the fact that we managed to break below that level, and I'm going to be paying attention to see how price may react from there. I do like your H2 as well. Kind of that level, I think, is close to 22,000. I think you have that one that level marked somewhere in there. I do like that level as well, so I'll keep an eye on that one as well. But yeah, we'll see for the US Open how price may react. But overall, I kind of like it. And the S&P, I think, is doing something similar. Dow is slightly different where price is on the Dow, but I think there's maybe more possibility as well in there. Yeah, that's basically it. We have many people on the background ready.
Yes.
All of them have the same expression. They are holding the chin like this. Like it looks like that you are talking something really important in here. So let's. I think I'm going to do the intro and then bring everyone in.
Yes.
So from my
before-
side, yeah, go ahead. Sorry, Peter.
I was gonna say before we take that transition, I want to say something about Tatyam, if that is how you pronounce your name. You have a very
Yeah, it's a good question.
valid, and very critical, and I like that. That's what you need to have in order to succeed in trading. You got to be very critical of everything, of everyone, all the time. And this is exactly, I like this question. Obviously, I will not be able to answer this right now, but I'll come back in about 1 hour, and I will happily discuss this if depending on what the content we're going to be having. But stay tuned, Tatyam, and I'll come back to that. That's for me. So I'm going to give back the word to you, Pedro. And whenever you're ready, I'll set the intro for our colleagues, our very esteemed colleagues, to take the stage.
Okay, yeah, just my quick 5 seconds answer to that question is proof of concept, right? Just repetition and prove yourself that actually those levels work. Neither Victor or me start looking at order blocks or supplies and demands and just thinking, yep, this just works. No. Because someone else said, like, actually repetition after repetition, hours and hours and hours and thousands of hours looking at charts and maybe reacting from a certain level, and that start making sense for us. And that's why even when you're talking about order blocks or supplies and demands, everyone may have different ways to draw them, to mark them on the charts, and that's because of repetition, practice, and so on. But that's an interesting question in that sense. So from my side, thank you very much, guys. Enjoy the rest of the session with our beautiful hosts, and thank you, Victor. Thank you very much. I'll be back next week, back from England. Yeah, so that's the next time. I mean, thank you, guys. Bye-bye.
All right, Pedro. Thank you for your efforts to our community. And guys, stay tuned. Hit the like button. Subscribe to our channel while you're watching this little intro for our next great traders coming up next. See you soon.
That's right. What an intro from the boys that was. I mean, I feel almost not worthy of such an intro from Pedro and Victor there. It feels I don't know. It feels like a lot to live up to. Griff, LJ, how you doing, boys?
Going well.
Good.
Going well.
Yeah.
Griff, how's the sleep or lack thereof?
It's I'm getting used to it. I'm adapting. It doesn't improve, but I'm getting used to it. Yeah.
Yeah. I was gonna say you just have to get used to it at the end of the day, but you soon realize why they use sleep deprivation as a method of torture.
Oh yeah.
It's hard going. It's hard going. But for somebody that wakes up at 3 o'clock in the morning to set a trade, I mean, this should be easy going for you. It shouldn't be that hard, should it?
Maybe I have a slight advantage, but it's still hard. My patience is running thin, so I have to be careful trading.
For somebody who waits so long for their trades, for you to say that your patience is wearing thin, that is something.
Yeah.
That is said like a true father of a 3 week old.
Yeah, about 3 weeks now.
Yeah. So I completely sympathise. But good to see you, mate. First things first, we always start this session with you. Have you taken any trades?
Nope. 0 trades.
Okay. How many nappies have you changed in that time?
Let's see, maybe 100.
Excellent. Okay.
And,
All
yeah,
right. Okay.
I just maybe I need to switch strategy.
Yeah,
with
I
the
think you
nappy
need to
changing.
take you need to take your nappy strategy over to your trading. All right, that's what
Yeah.
we want to see. We want to see 100 trades coming through, and plowing through. So just don't start scraping those nappies. All right, that's or scalping those nappies. That's not a way to go.
Nasty, bro.
So,
Nasty.
yeah, but good to see you. Anything in particular that you've been looking at over the past week since we spoke to you last week? I mean, obviously we've had a
still
bit of
JPY.
Yeah?
Yeah, I've not had an opportunity. And to be honest, now this week I'm being a bit cautious because there's so much news, like on JPY pairs and the dollar pairs. So
yeah.
I'm being extra careful on the funded accounts. But yeah, basically just JPY pairs. It's trending up. If it keeps trending up, I'm looking for a buy. If it reverses, look for a short. So that's all I'm watching.
Yeah, absolutely. I'll give you a minute just to get your charts up and what I know LJ's got his charts coming up as well. But while you guys do that, I'm just going to pull up gold because gold was something that LJ and I were looking at this morning, and I had a gold position in around here, if I'm not mistaken. So it was coming up and looking for it to come here. It didn't work in the end. Ultimately, I think it was around about here, if I'm not mistaken. Let me just put it up. It was something like this, if I'm not mistaken, with stops there looking for us to go higher. In the end, what happened was we came down. We took all the liquidity that had been created lower down. So we came down and we took these lows down here. What we've since done is we've then taken this big long trail that we've got here, and sure enough, the trade now looks to be playing out quite nicely. Of course, it started as I was already then doing other things and wasn't watching the charts, and so I've missed out on that entirely. But yeah, it is a nice buy at the moment, I would say. But as you say, Griff, the way the markets are at the moment, given the kind of the wider news going on, it really doesn't take much potentially to spike things. Now, I say that yesterday there wasn't really much. Okay, there wasn't really many headlines, but at the same time, given what happened over the weekend, we didn't really have any major gaps or major, kind of moves when the markets opened on Monday morning in response to the events over the weekend. Are you kind of keeping an eye out for something like that? What's your kind of play here? Just literally leave it alone, don't touch it?
I mean, I'm just being more cautious. I'm treating it like a warning sign. So I'm not avoiding trades completely. I'm just being a bit more careful if I know there's a news event in the next in like the very near future. Because when I'm in a trade, a few hours after my entry, if prices moved away, I don't really mind if there's a big news event. It's only when there's a news event like quite close, because in the past I've taken a trade, maybe 4 or 5 hours before a news event, and that gives it enough time to kind of run in my direction. And then when the news event does hit, the slippage, if I lose, it's not so bad, and it also gives me a lot of room for it to go into profit. It just gives me a lot of room for it to whipsaw, basically.
Yeah, absolutely. Yeah, and I think that's the problem though, is that when you've got predicted news or expected news at a certain time, you can work around that. When you have no idea when the news is going to hit, you could open a trade now and then 5 minutes later suddenly somebody's decided to do something silly and all hell breaks loose, right? And we're all kind of just sitting on tenterhooks, which is I think is fair to say is why you look at people who who are looking at, for example, something like gold, right? Gold, obviously pumped up on Friday on the news of what had been going on, but didn't particularly fly. In fact, it's basically come back down to essentially where it was prior. So gold, in terms of a reaction to what's going on around the world, it seems like, okay, yeah, things are a little bit volatile, things are a little bit uncertain, but we're going to wait and see. I think LJ, you said it well the other day. That the markets are kind of, there's been so much with the trade war and all this other stuff. Everyone's like, okay, enough. Let's just position ourselves for for every eventuality as much as we can. And so then actually what that means is the markets kind of just sit in a holding pattern, don't they?
Yeah, basically, you reach this point of saturation of comments every hour, every 3 seconds, and then you've got multitudes of them, all from different areas, right? So we've had various comments around some more of the trade talks with Japan, with the UK, Trump, mentioning the EU trade talks as well, and then you've got all the geopolitics all in the mix of it as well. And I mean, 2 weeks ago, 3 weeks ago, you have the EU headline or Japan or something like that, we'd be moving. We've had multiples of them today in the past couple of hours as well, and nothing, absolutely nothing. So I think we have reached that point of saturation where the market goes, yes, it is all just rhetoric at the moment until we see material stuff. So I think as far as each of those points, I think the market's just going back to its sort of by the by type thing. Because you can't move on every single thing 3 seconds when there's been that many times knowing that it's just going to be unwound.
Exactly.
In short order.
Exactly. Yeah, it's there's only so much that the market can spike and go nuts, against whatever may or may not happen, right? Looking at Friday's move on gold, though, one thing that really I think is worth noting is that there was, I think there was an element of people knew what was coming. Larger institutions knew that something was coming, because if you look at it, just how the 4 hour on Thursday into Friday night opened up with this massive engulfing candle. Now it hasn't been respected because it left this inside bar, and this wider area was quite nice for support. But the point is that it wasn't so impulsive that suddenly we open up and the markets, have a massive gap, right? It was like, okay, right, we're going to go and we're going to solidly sell on, but it wasn't, it wasn't overly an overreaction, let's say, and I think that's where it's fair to say that it was using the current price action, the current, levels of support and resistance, saying, right, okay, where are we going to go with this? And sure enough, we had some moves up on Friday, but it's come straight back down. And as I say, it's back where we were,
Yeah, we've moved, definitely moved a bit further to sort of more technical trading once again. Whereas recently it's been very, headline, fundamental, macro type driven activity. Obviously being saturated on that. We've seen that the tariff effects and that sort of thing haven't really played through so extreme, like people were really kicking up a fuss about. So from now, it's going to be sort of things going back to the Fed and their kind of outlook on things at the minute, and same with central banks around the world. Now, obviously, with that, we're going to have a lot of comments being, we're not doing anything, we don't want to say anything, because there are still at the same time a lot of things up in the air, particularly if this Iran situation further kicks on and you get critical infrastructure with oil, that sort of thing, being materially damaged. So that's going to put a lot of question marks around their forward outlook. So I'm sure that's what they'll iterate. But that said, at the same time, we are moving back to somewhat of that further fundamental aspect of the sell the dollar kind of trade that we had before. And, everything's kind of moved back in that direction, and we're just playing it by the by. So
Yeah, exactly that. I couldn't agree more. Essentially what we're looking at is right, okay, this is the kind of the it's a bit like, what's it called? Is it Stockholm syndrome or something like that? Where you kind of get used to your kidnappers or whatever else. It's kind of like the markets have gotten used to the madness, and they're like, oh,
Yeah,
do you know,
yeah.
oh, really? All right, I get over yourselves. Move on. Come on. There feels like an element of that to the markets at the moment, and they're like, wake us up when you've got real news. Wake us up when you've got something to really, to really move things around, rather than you two playing in your backyard throwing missiles at one another. It feels like that. Do you know what I mean? It feels as if the market's just saying, oh, be gone. Be done with you.
Yeah, exactly. I think it's very reminiscent, very similar to when the Russia-Ukraine thing sort of started, right? And initially that was a huge kickoff, and there was a lot of activity around this, and there were some material things that happened with the pipelines, that kind of stuff, and obviously natural gas through the roof and all this. But again, people eventually kind of got over it, and at some point you either have to start forward discounting that, yes, there's going to be some kind of higher escalation of something nuclear or something, right, the extremes, or you go that's too extreme, that it's not really realistic to think about that, beyond the further question that obviously if that's the case, I think we got bigger problems than what's going in the market at that point. But I think sort of similar here. There might be a difference if the US materially gets pulled into it. I think that would start to spook some people to a degree, just given obviously the already concerns around the US and the debt profile, and then therefore how much they have to ramp up spending and that kind of thing to do all this. But outside of that, I think we're going buy the buy, and for now we got retail sales out later, which the consumer has been in focus a little bit more of recent, since we've seen some weakness there. So there'll be eyes on that, and then leading into the Fed tomorrow, no doubt. So yeah, it's fair to see a bit of hand sitting, given just sort of where we're positioned amongst things at the minute.
Yeah, exactly. Just looking at gold at the moment, gold has reacted off nicely off this little zone here that I have marked out. The reason for that was it was a nice engulfing candle on the 15-minute. So it has wicked back off that. I still feel like we've got more legs to go on the longs. I'm not sure how far we're going to go, but I think there's still room to go for these higher levels of major liquidity. I did see somebody was asking in the chat with regards to oil, and I know that was something we were also looking at, LJ, earlier on today. I mean, the problem with oil is that this was yesterday's candle. These blue lines, those are the highs and lows of yesterday, and we just sat right in the middle of it. And that's ultimately the problem, is how do you pick a direction? I think something like oil is so responsive to what's going on. I know there's a tendency to want to go in on it and think, oh yeah, there's going to be money to be made because there's going to be moves. But on the other hand, you try and get in on it, it feels like a bit of a toss of the coin. What would you reckon?
I think we will have, obviously a continued minor bid into oil for the time being. Obviously based on that risk premium of a potential greater fallout as far as critical infrastructure regarding oil. At the moment, we've largely avoided that, so there's no major disruption or that kind of thing. However, still entirely possible, obviously, so hence it will attract that risk premium at the moment and that slightly higher level. But just like you said, if things sort of quieten down, nothing really pops off so much, we could easily see it, pull back into the 65 kind of area pretty quickly. And then we'd probably be into, just back into this kind of range that we've been in for some time now.
Yeah, and that's
so
exactly
calling it long or short from where we are now, as far as the spot price, like you're saying, would be tough. You are literally basically flipping the coin of whether this thing happens or not, really, and it's so hard to say. So
yeah, exactly. Griff, what are your thoughts? I mean, I know you have your very kind of set pairs that you go for. What are you seeing in terms of, I know you're looking at the yens right now, but in terms of your other pairs that you're looking at, are you finding anything in particular is reacting and showing any kind of possible entries, but you're just maybe being a bit more cautious with it?
All the USD pairs I trade, they're all kind of just going sideways at the moment. So I have a liquidity sweep entry kind of in my back pocket that I don't really use too much. I want to practice it a bit more. But the USD pairs are like ripe for these kind of range bound sweep entries, kind of shorting as we break the highs and buying as we break the lows, basically. But yeah, I'm a bit more cautious with that because it can just contribute to drawdown, having additional entries. So at the moment, I've just been focusing on what I know what I know best, which is just the trending entries, which means no trades, basically. But yeah, I think this liquidity sweep entry I'm talking about, it's something I think I need to focus on because my trade frequency is too low. I think if the things that make up a good trading strategy, you need to have a decent win rate, a good risk reward, and a reasonable trade frequency. My risk reward is very good. My win rate is like 30-40%, which is fine. But then I don't get enough trades to kind of make the most of it. So I think if I could, I was trying to think of ways that I can increase the frequency or the win rate. I think the frequency is a bit easier. And yeah, I think I just need to introduce a new type of entry like these sweeps or potentially new pairs. We've discussed that before. Yeah.
Problem is trying to find the time to do it, isn't it?
Exactly.
that's honestly, it is. I mean, we all have other commitments, other jobs, other, family stuff and everything else. It's like, when do you find the time to go and sit down? Especially, I mean, for you, Griff, I can totally sympathize as a father. You're like, when do I now go and, when I may have, if I had an understanding partner, I might have been able to go and spend a bit of a weekend back testing something and, just burying myself in the charts for a little bit and what have you. How do you juggle all of that when you've got so many other commitments? It's hard, isn't it?
It is hard. I realize now how much of a luxury I had previously. Like when I first started to learn to trade, I was in university. So I got to backtest like it was a full-time job, basically. And for about a year, I just data gathered. And that's how I got the strategy to a point where I was just like profitable out of the gate. And I haven't really had to do too much since then. I've just had to do, maybe a tweaking here and there. But yeah, I over the last like year or two, I've got this huge list of things I want to test and experiment, and unfortunately I can't spend a whole day back testing anymore. Like the best I can do is like 30 minutes in the morning sometimes. That's kind of my approach. I just have to do it before I go to work. But squeeze it in there.
It's a very, very hard thing to try and find balance on, I think. You mentioned earlier about the USD pairs, and I know obviously you were talking about the yen earlier as well. I mean, I've just taken the liberty of drawing out some trend lines on the yen versus the dollar right now, and if we go from the start here to here, we're basically, you can just see we're just ready for a breakout, like you were saying, coiling up, and it's just a question of, right, do we want to go higher and come and take the liquidity area here, or do we want to come lower and take this liquidity here? I believe longer term we are going shorter on the dollar. I think we're all in agreement on that. But there is part of me just thinks where we are right now, everyone's kind of like, hang on a second, let's just make sure we get the best possible price to sell this thing. There seems to be this kind of this support area where everyone's like, okay, this is all right, we're happy with this. Let's now just build ourselves up a bit so we can sell it at a better price when the time comes. Does that seem reasonable, LJ?
Yeah, the Fed hasn't quite stepped away from their current mandate, just going by the by, right? So I think it's sort of, as soon as we get some kind of inclination there at all, that they're at all interested in further rate cuts. Right now, they're very much still just touting the potential for higher inflation from stickiness from some of the tariffs. They will be looking at higher energy input prices now since the current conflict. So chances are that will keep them sitting on their hands for the time being. Obviously, the labor market data that we've had has been slightly coming off per non-farm payrolls and that sort of thing, but it's definitely nothing dire at the minute. You would expect eventually some kind of slight slowdown. I mean, the non-farms have been quite spectacular for quite some time. That said, obviously, we always have those readjustments as well, which doesn't make them look quite so spectacular, but nonetheless, they have been pretty consistent regardless of that, right? So as long as that consistency is still there, and per their view, they can see forward outlook potentially having some elements of risk for inflation. So long as the consumer is still going pretty well, they probably will sit on their hand for now. So from here, each incremental bit of data will start to become more important, because just naturally we should be coming to some point now where some of these things do start to show some wobble, and then it's just the question of exactly how fast do they start coming off. Is it very tame, or do we all of a sudden start accelerating? And then that's when the Fed will have to jump in a bit more quickly.
Yeah, absolutely. Just looking at gold at the moment, it's tapped into this area here. I'm just not sure how much legs it's got. As I say, it bounced off this zone that I had marked out earlier on a 15-minute engulfing. It is pushing higher, so we'll see how it plays out, if it's going to just move off from here and potentially go for those higher areas. I mean, we had this rejection off it, but we've still got this cluster of orders here, so that's why we've seen this little bit of a rejection on here. The only thing is the 15-minute candle has opened up without a wick, so it's not the strongest of moves at the moment. So we'll see if that is going to hold or not, if we maybe get a retest of these lows again and then maybe look for an entry. Right now it feels as though this 1-minute candle is going to hold us up for the time being, and there's not really too much left in terms of this move at the moment, so we'll keep that one an eye on.
Yeah, we highlighted that, just the round area at 3,400, I think, earlier today during that ABL London session, London Open session. So, I mean, naturally hitting that point, coming off a bit, makes sense. Next high level at that 3,400 as well. I think there's still reasonable shot to get up there today from where we are. I don't find that
sorry, mate. For some reason, your mic has suddenly turned you into a fish, and it sounds like you're underwater. I don't know if that's just me or if there's. Oh, there we go. You're back now.
Back.
It sounded like you were either in a fish bowl or a cardboard box or something.
Okay, no idea.
So apologies for that, mate.
Sorry. Yeah, I'm guessing. Yeah, that was just fish talk then. Didn't hear what I was saying.
Sorry, mate.
But basically 34.15. I think it's still a reasonable upside target from here. We had 3,400, that round number, as kind of the interim point that we spoke about earlier on. So I think there is still some more height in it today. I think that's a pretty reasonable shot. Obviously, I think like James was saying as well, we do have the data coming out later. So just to remember.
Leonard, I can't help but feel as though, if I was to, go something like, how far in the past do I have to go while looking for the overall trend on a higher time frame? How long in the past do we have to go for Arsenal to have won a trophy or something? As a QPR fan, I have literally no legs to stand on with that. So I just couldn't help it seeing the Arsenal logo on there. In terms of going back on an overall trend, realistically, what you're looking at on a trend, and LJ, Griff, please pipe in what you guys think. But for a trend to be valid, you've got to at least have 2 points, right? A minimum. And then the more times it's touched that line, then the stronger the trend. So you want to start from where the move begins. So if we were looking at a trend on the 4 hour for gold, well, this was the start of this current move in the bullish direction, let's say, right? So we start here, and we can see that this is probably where we're going to have our current trend line, right? That's how I would mark one of those out. The problem you have is when you come to something like gold, where it is at the moment, theoretically, you've got a trend line there to there, right? But that's not a very steep one. You kind of want the steeper ones, because then that's more likely to give you a trade opportunity. So your next one from here would be something along the lines of this down to there as a potential trend line down, right? But guys, what do you think?
Not sure if we're talking about trend lines and just building out the sort of structure, or just the larger overall prevailing trend. I guess if we're talking about the larger overall prevailing trend, to put it in simplest form, would be higher lows and higher highs, right? For an uptrend, and inverse for a downtrend. So, lower highs, lower lows for a downtrend. So you can see gold there in this structure, Mike's marking out clearly the bulk of the trading range at each sort of step has a higher high and a higher low, right? So you can clearly see that we're still structurally long. And then obviously basically just repeating that same kind of measure at each subsequent time frame, right down to lower time frames if you want that. On the higher time frames, just like you're saying, yeah, you just do the same thing, go out to the daily, the weekly, monthly, whatever it is. And then that's best way to put it in its simplest form. Beyond that, trying to figure out whether that trend is shifting and that sort of thing, and that's when you can start to measure like the angular momentum of said trend, right? So is it steepening? Is it sort of flatlining? Is the range that it's been trading in starting to compress? These kind of things are going to tell you whether it's still holding water, or if potentially that trend is becoming a bit more tired, and perhaps the move has sort of completed itself.
I'd give a bit of a different answer. I think what you guys have both said is really good for finding a trend, but I think maybe Leonard is asking like how far back he has to go to kind of determine, because obviously you can go on like the trend on the daily is different from the weekly, is different from the monthly. Sometimes it is anyway. So for me, this is really relevant because I trade on the 1 hour time frame. I don't switch between time frames. So for Leonard, I'd say the best way to determine kind of which trend is relevant and how far back to go depends on how long you hold your trades for. So if you're trading on a lower time frame and you aren't really in a trade longer than an hour, there's no point looking on like the weekly or zooming out too far. So I can tell you, for me on the 1 hour time frame, I don't really look further back than the last week's price action to figure out the trend. But maybe for, if you're trading on the 15-minute time frame, you might want to zoom out a little bit less, a little bit more. But yeah, for me on the 1 hour, I don't really look further back than a week, maybe 2 weeks max.
Yeah, definitely. Yeah.
Jason, I apologize that we aren't sufficient for you. But Victor
I think Victor's coming back later.
Victor will be back in about 20 minutes. His charts are still up, so Victor will be back with more order blocks, quasis, and all that other lovely stuff very, very soon. So no worries. Gold has broken the lows but it's still not managing to get past this area. If you notice here, and now again reacting off. Interesting price action at the moment, where it's just struggling to gain any kind of real momentum one way or the other. If we look at some of these other time frames, we can see that it's just trying to push higher, but it's still not broken this area here, which is where we had this little flick up, and it's just consolidated for a little while down here. So we'll see how that one plays out. If we're going to start coming back down, there is certainly plenty of levels down here for us to come and take on gold. So if you're looking at sells, certainly not a bad one. If we look here, we've got an inside bar there. We've got another one down here as well. So there's plenty for price to come and hunt for moves. And then this one here is a pretty important one. So we have this level here, which is a perfect double bottom on the 1 minute. So again, a really key level that price is likely to come and take. And also this level down here is the 4 hour inside bar. So potentially, if we see a nice reaction in this area, could be a possible space for sells. We haven't really left anything here for us to want to come and take, I don't think, apart from this wickless candle here. So it's a question, just wait and see how it's going to play out. It could well be that we go into a bit of a holding state, waiting for the news to come out in a little while as well. So
yeah, we've got quite a sort of low vol day today. So yeah, prices price across the board on just about everything is not really running too far. It's been fairly snoozy, kind of just in this lower range here all day. So definitely going to be a wait and see for the US data. If we can get a bit of an impulsive drive one way or the other.
Yeah, exactly. But you can see here, I mean, you know, this lower level, lower time frame liquidity down here, for us to make any really bigger significant moves, we probably need to see us come and sweep some of this before either seeing us move higher, or obviously we would come down lower to maybe retest this lower trend line that I've got here. So yeah, let's go have a look. Let's go look around the houses, as they say. We can see that Euro USD has had a bit of a pump. I saw somebody commenting on that in the chat, that it's moved on higher as they had predicted. So congratulations on your prediction. I hope you managed to catch a trade with that prediction. And yeah, it looks like, you know, this support zone is holding up for the time being. But again, we're not really seeing too much. I mean, this is our price action here for today. That's really not very much at all, is it? You know,
yeah, I've got an interim target at about where you've got marked out there, that 80, currently sitting long still from 52. So I'm gonna, depending if we get there, how close we are to that level pre-news, I'll either consider just, you know, taking that for what you can get for today, since it's been pretty quiet, then reassess after the data. Better else see if we can, yeah, sort of establish a break through that and potentially a run again at 116. Which I think if we can get past that 80 today, we probably have a fair shot of moving back up to 116 again.
Yeah, exactly. In terms of this level here, this is our inside, our wickless 11-hour candle. So again, an area that I think price is probably going to retest. And then we do have levels higher up. So again, if you look at it though, it's just consolidating down, right? It's not really pushing out one way or the other, even on the higher time frames. So again, it's just something you just have to kind of think, right, okay, are we going to consolidate down and then pull back and then head on up? Or, you know, are we just going to keep on going higher? My instinct, I don't know why, but I couldn't pinpoint exactly. I would just simply say this area looks like a nice area to be taken before we then push on down. That's my my kind of initial expectations on it. I love you guys, but my boy Victor is still respect to you, but I want to see him. That's all right, Jason. That's all right. We will we'll take the insult as intended. That's fine.
Yeah, I
So,
think euro dollar. It's similar to what we were saying with dollar yen, right? We're in this like you're saying, kind of a holding pattern at the minute. Prior to some of the bits that we have out before the Fed and then the Fed, and I would say again with dollar yen, forget that slight run down and sort of testing that 143.40 to 143.60 level, where we're gradually getting higher lows. If we can't break it another time, I wouldn't be surprised if at that stage, potentially we get a bit of reversal and a bit of strength coming back into the dollar. You could see dollar yen running back up to this kind of that area. I think it was around 148 to 148.50. Definitely see that potentially happening. That said, we've had reasonable expectations to have seen that in the past while, and there very much is becoming more and more of a temperament to just sell dollar yen, obviously per the larger dollar selling structure. And then obviously in that event, that would correspond with euro dollar coming down, like you were saying. But I can see that on both sides, but I still have a lean the other way. I mean, unless the data sort of surprises and we keep holding up strong for a bit longer, because some of the bits and pieces have shown a bit weaker in the past, say 2 or 3 weeks. So I think the call will be that as to whether they stabilize or continue showing some weakness coming through.
Do you not? I mean, one of the things Claudia saying, the U.S. aircraft carrier is on its way to the Middle East and dollar will fall. The dollar needs to use its balls. There's one way to put it. There's one way to put it.
Yeah,
Claudia.
there have been a huge amount of evacuations in the past couple hours. Everywhere there. So
yeah,
who knows? Something to keep an eye out for.
Yes. We'll just need to keep an eye on that. But one of the things I've noticed is that, particularly when it comes to US economic news, there's a lot more surprises. The markets seem to struggle to get a consensus, other than whether they're going to lower rates or not. Generally speaking, there seems to be a struggle to get a handle on what the numbers are actually going to be, and then they end up not being what they're expecting them to be. Whereas for places like the EU and others, is a little bit more, we know what's going to happen. These guys, they've kind of got a bit more of a steady hand on things, and it's less volatile, would you say? Do you think that's where maybe some traders out there can maybe get a better edge by focusing their time and their energy and their efforts on the US news releases?
Yeah, somewhat. I mean, generally speaking, the European data is more stable. Obviously, the aggregate headline Euro data is going to be, because it's just the aggregate added up of all the major economies. So by the time you get that, those numbers are basically in line, because it's just a simple game of addition. Per the other surrounding countries, just like you're saying, a bit of a different sort of way of life. Not so go, I guess, as the US and all that. So there does tend, on average, at least put it that way, to be a slightly greater consistency that you see through the data. That said, still when there are those minor shifts, however, you do get big movement, because obviously euro dollar being the next largest traded currency, right, per the dollar itself, right? So still something to keep an eye on both ways, I would say. And there's been various changes in recent times all over the world as well, though, with a lot of the collection agencies and how they sort of measure and track all this data. just seeing as, you know, economies have evolved over time, how they survey people, a lot of that had to change as well during COVID, right? Just to even try and keep up with this stuff. So there's a number of segments where they haven't 100% got the approach down completely yet. And that's why we often still are seeing these big revisions sort of at the end of the year when they do their kind of aggregate numbers. So, but yeah, I think, per that, just got to take it by the wire, really.
Yeah, if this is if that is the case, then yeah, that's obviously going to move things quite a bit, Danny. So I'm not seeing anything on financial juice, but I was just trying to see if I actually had Reuters in on my financial juice settings. But
yeah, it did seem to be why Trump left early. Seems to be the case. And then, yeah, every country has had massive recommendations to evacuate out of all those areas. We're getting that from the US, the UK, India, China as well, saying the same in the past 3 or 4 hours now. So there does appear to be something on the horizon, which is concerning. But
yeah, absolutely. So Griff, your really approach is sit on your hands more than you have been.
Basically, yeah. I mean, I'll still take opportunities because in my back testing, I don't look at news. I don't know when it's coming. But in the position I'm in now, I've got a lot of funded accounts I need to protect. So I'm a little bit more cautious than I was in the past. I'll still take trades. I'm just going to be particularly careful around the news events this week, like the war, the developing war. That probably won't impact my trading because it's out of my control to know when there's going to be volatility. But like with FOMC, I'm going to be really careful around that.
Yeah, absolutely. Gold has broken down from that area that we were talking about. So it looks like the sellers are going to come in now and push us lower to probably come and take these lower areas. So so we'll see. As Venetia says, guys, enjoy trading until they cut the internet, run and open your positions. Yeah, exactly. And now we can trade trade oil. Sorry. Yeah, I mean, it's let's see if oil is doing anything at the moment on those rumors. Nothing at the moment. Gold is falling quite heavily at the moment. So certainly
something in the pound will come off quite a bit in the past little while, 5-10 minutes as well.
Yeah. So
none of those moves seem very consistent though, because then at the same time, like I mean, NASDAQ, S&P moved slightly up in the past.
Yeah, it does feel it does feel almost a little bit like positioning. You know, there's no doubt rumors and things like that will shift things, but there will also be the expectation to okay, let's make sure we get the best possible position, because let's not forget, somebody gets in on a buy here at 396 versus somebody getting in here at 390. Those $6, when you're an institution, that makes a massive difference, right? You know, for us retail traders, it maybe doesn't make as big as a difference, but for those big institutions, you know,
sometimes, I mean, it always depends how much leverage you're running, or if any.
Yeah.
Right.
Yeah. But I mean, we know that the big guys, the market makers, for them, you know, every point, right, ultimately makes a significant difference just purely by the amounts they're dealing with, right? So so we've come to an interesting area here. I'm just curious to see how how it plays out on the 1 minute right now, because it was very impulsive down. Let's have a look elsewhere. Yeah. Aussie US dollar doesn't look quite ready yet. Let's see.
Just back into the middle of the range for today, really. I mean, you know, pretty much like, you know, Euro's basically just at where it opens, right?
Interesting that, again, I said it before, these moves are happening in the last 10, 15 minutes of the 1 hour candle.
I mean, people, you know, turning up to the office in the US now, you know, pre-market, pre-stock market open, and then obviously that, as far as, you know, currencies and everything, they start to pile in, try to build out their trade ideas and stuff for today. So,
Joke swag. Gold. We've been looking at gold all stream, but we'll look at it again.
just
it's not going anywhere.
back into that area, yeah. And again, just dead middle of kind of the range we've been in for today.
Buy it, sell it, go with your strategy, mate. So yeah.
What's your guys' long-term thoughts on gold if, like, you know, with a developing, more developing war? Do you think it's already at, like, it's already at really high prices, isn't it? It's been trending up and up and up and up. And I know people like to buy gold in times of crisis and things. Do you think there's room for it to go higher in the next couple of weeks if the outlook is bad?
Yeah, definitely. I think
yeah,
we'll just get a continuing sort of like bid into gold, I think. I think the rate will slow down. Obviously, we had a pretty good storm, but kind of in the same way how we kind of rolled through 2K and then got up to 2.2 and 2.3 and 2.4. And that was kind of the almost like sleeper period where people were like, yeah, gold's going up and it's doing well. But, you know, people weren't as like, wow, gold's kicking off like it has since we've come into the 3Ks, right? Mm-hmm. So I think it'll kind of go a bit more into that kind of pattern. And we'll just have a bit more ranging and, you know, a bit more retracements as we continue to gradually steadily rise. Obviously, you've got a persistent bid from all the just about every central bank in every country out there wanting to reinforce gold reserves. One, all the geopolitical stuff you're highlighting going on, and then two as well, just changing things with demographics and debt profiles of certain nations, and a rejostling of, say, the types of assets you want to hold. Obviously, there's still very much this lean to somewhat de-dollarize the broad portfolio, at least to a degree, just so it's not heavily concentrated after the sort of Trump kickoff. So yeah, I'd say we'll continue to see that. So probably still persistent bid of the medium term.
That's interesting.
JK, can I gold sell in fair value gap? Sure.
You can do whatever you wish, my man.
Why not? Go for it. Give it a go. Let us know how you get on. NAS 100 bullish. I was looking at the NAS earlier, and I do actually think the NAS is bullish. And the reason for it is we've come off and rebounded really nicely off this 50 level of this wider move. If we look at it on the 4 hour, it's basically this breakout here. Now, it didn't break the structure, so we're still within this wider structure of here. So is rebounding really nicely off that 50. So longs do look semi decent on the NAS right now. But again, you've got just over half an hour until the retail news. So you just got to be careful about what you're expecting to get from it, basically.
Yeah, we have held up quite well on indices recently. I must say. I think if we kind of keep holding up here though, and sort of we keep making like subsequent failures to really, get new highs or a break. I think there's a fair chance of some, degree of pullback of 4% or something like that, maybe, before people are willing to then reload, right? Just the sort of natural thing of what can no longer go up ends up coming down, right? You've clearly exhausted willing buyers at a certain point. And given the backdrop, how heavily are you going to step on the throttle at the minute?
Yeah.
Yeah.
Stephen saying, what I've observed these past 2 or 3 weeks about news, the market was just ignoring the news. If the news comes out positive instead of the market to selling, it's buying. That's my thought. Essentially what we're saying is that and we've said this a few times, the market just isn't really reacting to economic news like it normally would, because it's far more interested in policy decisions, commentary and action from governments and from world leaders, rather than lagging data, essentially.
Exactly. And news as well is always about the forward expectations. So it's like a forward discounting thing where people are trying to front run that already. So often you can have market positioning already pre-positioned for said outcomes. And then you get said outcomes basically in line, what you expect, and then hence no great reaction as well.
Yeah, exactly. Nabod Paul, I guess that's your actual name. No need for capital letters, mate. Keep it lowercase. We don't need to shout. But I have no idea. Do either of you guys know what an OTZ is?
Something zone. I'm pretty sure it's like a SMC.
It's an SMC or an ICT,
whatever.
Is it? Something like
ICT
that?
or something.
I don't know.
No idea what it is.
I don't know ICT and SMC or whatever myself, so I have no idea.
Me neither. So if that makes us terrible traders, guys, please forgive us. And Les Saints asking, any thoughts on crypto? Still long on Bitcoin and looking for longs after we touched order block at 105, 100, but would love to hear your thoughts. Optimum trading zone. Okay, there you go. Optimum trading zone. I assume what he's talking about is...
I'm guessing that sounds like things said, just like a, relative pullback. So it becomes, fair value in terms of the discount of the traded range that, right?
Yeah. So it's essentially talking about, okay, we've broken this structure here, but it's still part of this wider structure. So I'm not sure it's necessarily a break and retest. That's just my personal thoughts on it. Yeah, the fact that it's selling so heavily, can be indicative of a strong move. But I would be, I'd be very, very careful about getting into a buy on gold right now. I'd be waiting for a better confirmation. And going back to this comment about crypto, so Bitcoin, where is it there? Bitcoin has been selling off all day, basically. And I personally feel that we're actually going to dip away from the highs just momentarily. I'm still long term, I'm long, but I still believe that I do believe that Bitcoin's going to come down, take these lows before heading up higher. I see we got Jonatan. He's not around, but he's still in with us, in spirit. So yes, I am. It is me. I am the alter ego ICT. Yeah, I'm crap at trading ICT. Guys, do you know what? We've spoken about this so many times, and this is a constant, repetitive topic. And I know that we got Victor in the background, so Jason's going to be thrilled to see Victor coming back. But I just want ICT. as a person, we all know that he creates this kind of air of madness, right? And he's like Marmite or Vegemite. You either love him or you hate him, but it doesn't matter, right? He is just the face of this chaos, right? Ignore it, right? If you feel that there is something in ICT concept that makes sense to you, that you can gain an edge by back testing it and getting data that aligns to it, go ahead and, you know, go and learn it, go and trade it. But by all means, do not start arguing amongst yourselves with the whole, he's never going to win the Robbins Cup and he's a fraud and this, that, and the other. We all know that the guy does it, but this is how he manages to get a bunch of people to believe that he is the market maker and that he wrote the algorithm. I actually spoke to somebody who actually wrote an algorithm for the market in the early 2000s, and it's not the ICT guy. So it's you know, just go have a look at it if you want to, but please don't go all cult crazy on it.
Some of it works, some of it makes sense, some of it doesn't, and he's just found a way to package all this stuff together. He basically packages it so that he kind of just says everything about everything, so that then he can always say he's right, and if it's not working out, then he can say I'm wrong because there was this other, right? So it's a big marketing thing. If it helps you, great. If not, right? I would say, build your own strategy, your own approach. If there's elements from that you found useful when you've applied and it works, then brilliant. But he's just some guy. So
him as a person, just don't take him too seriously. All right, that's the advice. All right, we have overrun, and we've got Victor waiting patiently in the background. So Griff, LJ, thank you, gents, once again as always to have you with us. Griff, we'll be looking forward to hearing about your sleep and your trades next week. And LJ, we will be back over on ABL as always, guys. The Alpha Beta Lab, come join us there. We'd love to see you. We'll be back right after this with Victor. But for now, see you next time.
Thank you. See you guys.
We are definitely back. Thank you guys for the input, all of you colleagues, hosts, co-hosts before me, and I truly appreciated that we are part of this. You guys are part of this this initiative, this effort that we, the 5ers, is, and we as part of the 5ers, we are giving to the trading community, authentic traders who will speak their mind up about anything and everything, including ICT. Let's check the markets. We can let's see how the chat is doing. Let me know in the chat, guys. By the way, hit the click. No, not hit the click. Click the button or hit the button, whatever you may want to do. But subscribe, like to our channel. Because that is important, much more important than the discussion about ICT. Although I like it, though. You know why I like it? Not because of it, any big revelation you might come through it, but because one, it is coming from someone. All of us are, one more than others, traders who have been in the market, in the industry for some time. Not a few years, but much more than that. Some more than that. And it's, to understand, to put things into perspective, to understand, is this all hype? Is there some truth to that? Right? It takes experience. It takes time. And here you are, you have a couple of traders who have been in the market for some time, giving you their insight, their point of vantage about topics like ICT and others. That's very important. It's like sitting among experienced people in any kind of field and hearing them out. They are experts in any case on the experience side, right? So that for sure we know. And I think it's what I like about having those discussions, even though I mention it again, it's making everybody, especially those who are new to the market, conscious about, don't believe everything that shines, right? Not everything that shines is gold. We had a question from let me see who it was at the beginning of our. Are you still with us, Tatyam? Are you still with us? You had a couple of great questions. I have marked them to be discussed later on, meaning, for example, right now on our stream. If you are, let us know in the chat, and perhaps we can have a little discussion on it. I can discuss it to great lengths, and if not, then perhaps I'll do it later on, and just letting you know that you can check it on our since this is YouTube, you can watch it after a couple of hours, any time afterwards. All right, we have Diana coming in a couple of seconds. In the meantime, let's see what you guys are thinking today. Now, thank you, Vinicius. Thank you. Hello, Jason. How are you doing today? All right, so yes, Mike, I do have something on my face, and it is not coincidence. Yes, this is a mask, and it is covering part of my face. All right, so let's see. All right, so while you guys are acting in, we have someone in the chat taking a buy position, a long on NAS. We can look at that on our chart as well. To Nabodit, if you are if you don't mind, let us know what you where you enter, more or less, what time frame you're looking for. What are your stops, and you don't have to be too specific, but just to give us an idea as to what is what is the what is your idea? Or this is a scalp? Are you holding it for a couple of hours, or are you buying here for many weeks potentially? Let us know so you can so we can look at and put in the right perspective. That is your trade. Well, if I may mention a couple of things, right? Very quickly, not doing a complete top-down analysis. I see Diana is in the background. Diana, let me know whenever you're ready. Oh, you are. Okay, perfect. And let's welcome Dr. Cole with us, who will be, and she is right here with us. How are you doing?
Hello. I'm doing well. How is everyone? Hopefully you can hear me okay. I'm in a different spot today. See if I have a little bit better connection.
Yes. It looks better. We can see the connection seems to be better. We have yes, we're doing fine, and the chat is very anxious, very waitful for your entrance as well, Dr. Cole. So that's always a good thing. We had one person saying they're going long on NASDAQ. Is there anything, what can you tell us about NASDAQ today? If whenever you're ready with your charts, we can share them. But would you say that's a good assessment of, let's say, someone who is wanting to take a trade in the next couple of hours? Is long the direction NASDAQ is pointing according to you?
Yeah, that's what I'm looking at as well. So I should have my screen shared now if you want to flip over to that. And I was looking last night. I was a little bit early last night, but I was trying to get in, as price was kind of rebounding from this level here. So we had a really nice push lower, and then price rebounded, and it just couldn't get going off that level. So if you were taking really quick profit level to level scalping, you were able to lock in a little bit, but it just never really got going from there. So that's what I'm looking at as well. This is the S&P, not the NASDAQ, but we can click over to the S&P or to the NASDAQ to see very similar situation. So price has built this consolidation, and I'm also looking for a push higher. Now, we might get a little bit of a sweep lower before there is news coming up in about 16 minutes. So core retail sales is coming up in 16 minutes. So it might be worth, obviously you have to trade your system, trade your plan, but it might be worth waiting a little bit to see if price will want to sweep a little bit further. You can see there already was this kind of press below this level here that was set last night in the Asian session. So early on in the Asian session. And then price did sweep it and is starting to push lower. So it is a probabilistic setup. I'm looking at the same thing. It looks great to me. Here's back to ES. I have some levels marked out. And this 60-50 level was a big one. So last night when I was watching it, it didn't quite hit 60-50. So this was maybe a little less lower probability entry. But you can see it did move from about 60-52 up to 60-75. So you could have locked in a little bit of profit, but there was a second opportunity here as well. Really important to lock in your gains level to level, though, because it could be a little bit of a wild, you never know what you're going to get in the market. But this week we do have FOMC unemployment claims tomorrow morning, or at least for me in the morning, right before the New York session opens. And then later in the day will be the FOMC, and Thursday's a bank holiday. So that makes this a little bit of a unusual week.
Yes, awesome. I would like to share my ideas on NASDAQ as well. There is something with my trading view. I'm not sure what it is, but we'll manage through it. Diana, so you're hearing you explain, your thoughts on NASDAQ. Is it a right assertion to assume you are going to wait for the news to come first and then look for opportunities?
Yes, I would say so. So let me put it back up on ES here. So I'm liking how prices moved above this level, but I already did take an entry. So I do already have a small position. But if we see continuation through and price doesn't want to come down and sweep any further, I would add to the position. So a little of both.
Okay, so you're flexible with your entry. Getting is it sort of like a feeling, a smaller entry just to get your foot in the water while you're reading the market?
This is a viable trade right here. So this is a probabilistic setup that meets the criteria that I'm looking for. So entering before the news is just fine. At this moment, when there's 13 minutes until the news, if I wasn't already long, I would be waiting until after the news. But already since I'm in, it would be an ad. That answers your question.
Yes. Okay, I understand that. You're looking at the. Go ahead.
We only have 13 minutes until the news event. So for me, if I was not in a position, I would want to let that 12 minutes now go by and see what happens after that, because it is a high impact news event. Core retail sales can move the market, so we could see price maybe want to collect some liquidity down below here and then push higher, but since I'm already in, I would wait until after the news to add.
Okay, perfect. I'm gonna switch a little bit over to my screen, if that's okay with you. What I'm talking about is that, and I have a question for you, Diana, because in terms of the patterns we see in the market, right? I'm not completely sold yet. As a matter of expression, I'm not into the idea that we're going to reverse for a next leg down from the markets, right? Because in here, this is before, that is the top of the 19th of February, of course. I can see some reversal patterns or necklines being broken, namely on the daily time frame. This would be the neckline, and that gave us a couple of entry order blocks, none of which, the first one, price didn't even flinch at it, which means that there wasn't a signal. The second one, price did have a little reaction from it, but it never really signaled. It had a reaction, but no signal, in my opinion. And we eventually broke out of it. So this order block is invalidated, but it still looks quite toppy, if you ask me. Right? There is that we can clearly see there's like a deceleration of price as we're getting closer to that top. So what is your assessment on, do you think there is still that possibility of a reversal and a continuation of this gigantic move we saw starting from February?
Yeah, it's possible. It's possible. And I'm not in the business of predicting what price is going to do. I just try to trade what I see happening. And so it's completely possible that we will see more of a pullback before price eventually continues higher. There is a bit of a slowdown, like you mentioned, a bit of a consolidation. I do like how price on Friday dipped below a couple of the previous day low and a few days from 1, 2, 3, 4, it looks like 4 days prior, and then pushed strongly higher. So yesterday's price action was pretty strong. However, it went slightly above the previous day high and ultimately closed a little bit lower. So I would like to see price continue above some of those previous day highs and close above the previous day high to really signal strength. But it's entirely possible that we could see, especially since we're seeing so many headlines that are really driving the market and creating volatility from time to time unexpectedly in the market, and FOMC coming up later this week. It's entirely possible that we could move a bit lower before we push higher. But for me, I'm always just focused on trading what price is doing and avoiding predicting what's going to happen, to keep the probabilities on my side, make sure I'm taking probabilistic entries and knowing that any trade that I take ultimately can fail. And so my job isn't to predict what price is going to do, but how I can enter and exit in a probabilistic manner and capitalize on the moves when the market, cooperates or moves in a way that works with my system.
I understand. That is completely in alignment with what a trader should be doing, right? It is not about knowing the future, because we don't know the future, but positioning ourselves in the best probable scenario. And what I see is that we had 3 areas, and that's how I can enter. It doesn't mean that the market always uses these structures to reverse. It can reverse without using them. And even within these structures, price often violates them, doesn't respond to them all the time, right? So, but I had 3 order blocks, which I indicated before, that there are good areas where price, we could see the sellers coming back in, because that's what I did in the past. And if I see them, the first one, price was not reactive at all, as I said, right? The second one, we had a reaction, but eventually we didn't broke any structure from this move, from where we were. So, and eventually that order block has been invalidated. So a break of or an invalidation of a bearish setup, to me, that's a bullish sign. That means that where the sellers are supposed to come to the market, they're not there, right? So to me, that's making things, it's in a way taking away some bearishness from the market, making it relative net positive. Obviously, we have the market reacting quite bullishly since the correction we had. And the question is, what levels would you be watching, Dr. Cole, as to let me rephrase that question. Are there levels you're watching that would invalidate this? I know you're slightly looking for a long position. You're already in a long, but those are a bit more shorter term trades. If we zoom out and look at a daily, what are the levels that would make you start looking for a short? Are there anything you can say about that?
The levels that I'm looking at are going to evolve and change as time goes on. So it's a little bit hard to give those out long term. But both in the short term and the long term, I am primarily looking to be long right now. The market has been so strong lately, and there is nothing that I personally see here that makes me excited about getting short. When we are losing a low, price recovers and the dips get bought. So for the time being, I don't see any reason why I would be looking to short. At least in the S&P and the NASDAQ, the indices are much easier right now, in my opinion, to trade to the long side because of the strength that we're seeing and because of the consistency in how price is pushing higher. Now, somebody in the chat asked, how do you identify these signals before price action takes off? And one of the things that can be really important and really helpful is to look for big sell-offs that eventually get bought. So, for example, if you're looking at the hourly, you can see there were times when price absolutely just tumbled lower and then essentially found a bottom and pushed higher. So like if we look back at, I don't know, if you want to switch back to my chart, it might be a little easier to point. If you're looking back at Thursday night, I believe it was Thursday evening. Forgive me if I'm not saying whatever time zone you're in, but I'll just point and
That's fine.
You can see on here. So this huge candle, couple candles lower. So this was a news event. When this news event happened, if you're trying to buy this because you think it can't possibly go lower or something like that, you're gonna be in some trouble. And to be honest, at first it was a little bit of a slow roll. I was watching price at this time, and it was a little bit of a slow roll and looked like a couple times maybe it was going to bounce. But eventually it did, kind of find a bottom. Let's see if we can see back. It was back inside sort of these consolidation. These boxes are different consolidation levels. So price had kind of dipped into this level here and then started to push higher and close higher. Waiting for a big event like this is a really good way to find long entries, because ultimately after that huge tumble, the price started to push a little bit higher. And a similar thing happened at the open of the market this week. So when price opened, it gapped down. So it had been around the 60-30 level and it gapped down, I think around 6,000 there. So gapped down to 6,000 and pretty quickly got bought up. So because we're seeing that where prices continue, it's not a guarantee every single time. But what we're seeing is when price loses a level, pushes lower, takes out swing lows, whatever, ultimately the dips are bought. And so again, that's just sort of helps me confirm my lean toward the long side. So we're seeing a very similar thing here where price, kind of fell off and then looked like this was hard for me to trade last night. I was trying to trade it, and to be perfectly honest, in a short-term perspective or a short-term, scalping or intraday trading, this was difficult for me. Looking at it now, I'm not sure why. It looks like I could have done a little bit better, but it was just challenging. But what we're seeing again here is a really nice move. So price swept below these lows and is pushing higher here. It was kind of like a double dip where it happened again and kind of came back down to that same level. So it's possible, you know, we have the news event in under a minute now. It's possible that we will see price want to take out some of that liquidity there as well, or price will continue higher, and we'll just have to wait another 45 seconds or so to find out.
Awesome. I like that. To you, it's the price action. It's the behavior of price after each dips, meaning the dips are being bought very vigorously, that tell you that there is enough buyers in the market to still sustain the levels we are. In other words, it's unlikely, at least right now, for prices changing direction.
It could always happen, but again, I'm
It
just
could always
responding.
happen. Yes.
Yeah, I'm
Yes, yes.
responding to, you know, probabilities and what is happening. You know, none of us know where the market is going to go, and so trading by in a way that requires you to make predictions, and maybe you're right, maybe you're wrong, is a very difficult way to trade, because more often than not, you are going to be wrong. Nobody gets the market right all the time. And so if we're using probabilities, you know, it makes it more plausible. So for example, we just had the news event, not much happened. We could see a push higher from here, but if we see price sweep below these lows again, that could be a great way to see if price, you know, kind of moves back above, holds above, and then pushes higher. So either way, regardless of how you're entering, if you're struggling, one of the things that I found really helpful is really taking quick profits, locking in your profit level to level. And what that does for you is it takes off some of your risk, locks in some of your gains, and intuitively, at least to me, it never really made sense. I started, when I started trading, the sort of like camp that I learned from was Investors Business Daily, and they look for kind of bigger gains. This is stock market specific, so it's a little bit different. And also commissions were a lot higher. Now we have much lower commissions in prop firms. You know, it's totally different. And so I think the best way is to, even if it seems intuitive, lock in the majority of your gains at your first opportunity. And then you eliminate some of your risk, and you can kind of build on that. So right now, price really isn't doing a whole lot. You know, like I said, I'm already in a position. I don't necessarily see anything here that makes me want to add to the position just yet, because we're not really getting a whole lot of activity in price right now. So I think, you know, it's probably better to wait until some of the volatility picks up a bit.
Yes, it is indeed. The news was, I would say, a non-event, since it really didn't matter really for price. The price didn't really react to it at all. We have seen bigger candles previously during the day compared to that one since the release of the that data. So all right, so let's see. I'm still looking to. I see that the number is not on Forex Factory. It hasn't been released yet. Do you see it already being released? Maybe there's a delay. Maybe that's the reason.
I have it on
we
mine.
haven't
It says actual is minus the core retail sales.
Okay.
Actual is minus 0.3%, and retail sales month over month minus, you know, negative 0.9%.
Okay.
So
Perfect.
I guess
All right.
not that interesting today as far as the news event goes. And I'm looking at the NASDAQ as well. And NASDAQ, you know, it's pretty similar. We did see a little bit deeper sweep here where price pressed lower and is pushing higher. So a little bit of a difference. S&P did the same thing, but it's a little bit more pronounced in the NASDAQ. You know, this is tough because this is a pretty you know, this is a consolidation that can be a little bit difficult. To me, it just kind of makes sense right now to, if you're in a trade already, I don't see any issue with, you know, a long trade. This is, again, for me and how I trade the market. I don't see any reason to worry about a position that I'm already in, but I wouldn't be interested in adding just yet. There's just nothing going on right now. I don't know if the market will remain slow. You know, maybe it's waiting on FOMC. Who knows? I don't know, but I think if you're in a position, I'm still happy to hold it, but I'm not eager to add or get in. We can take a look at gold too and see what's been going on with gold. So gold has been really kind of a stinker lately. Like, there have been moves that have been good to get in, but generally speaking, we talked about this last week. There are times when it's really great to trade gold when the trade is, you know, I hate to use the word easy in trading because trading is never easy, but relatively speaking, if you were long here, life was pretty good. Life was pretty easy, trending higher. Even the down moves in gold, because they're so vicious, they just kind of continue. And so as long as you're trading with the trend, gold can be pretty friendly to trade. However, since about the end of May, this has been really difficult price action, in my opinion. You know, maybe you were able to get in on some longs here and some shorts here or something like that. But generally speaking, it's been rather difficult. Now, one thing that I am seeing about gold that I really like right now and would be having me interested in gold is the fact that we, you know, price dipped below this close yesterday. So yesterday's close, it gapped down, took out the swing low from the previous day and the day prior, and is now pushing above. So to me, this is a long on gold, with the caveat that gold has been challenging. But I like that price is above, and maybe it makes sense to even wait a little bit longer. Here on the 1 minute, you can see where the gap down happened, and then price took out the swing low and then attempted again and pushed higher. So to me, this looks a lot more interesting than the indices for a trade at this moment. But, you know, it'll depend on if gold is actually going to do something or just going to hang around here. But as far as a probabilistic trade, I think this looks pretty good.
And what do you weigh the fact that you know, the conflict and possible escalation of that or de-escalation of that situation, does that weigh into your analysis in any way?
I mean, I think it's probably you know, wise not to get overly exposed, but there's always going to be conflicts. There's always going to be news. There's always going to be things coming that, despite your best efforts, you're not going to even be aware of or know until it happens. And so to me, again, you know, not predicting price, really focusing on taking probabilistic entries. And the only thing to me about this trade that does not seem I don't want to say it doesn't make it seem probabilistic, but, you know, the only hesitation I have with gold really is the fact that it has been so vicious lately. It has been very difficult to trade just because, you know, it has not produced a really nice trend like I showed on the daily before. And those are the best times to trade gold, when it's just like, again, not to use the word easy, but relatively speaking, it's a whole lot easier. And so more than conflict, it's just, to me, like, okay, is gold going to cooperate, and are we going to get some type of trend? That is more what I'm thinking about when I'm looking at gold versus, you know, what's going to happen with news. We just have no way of knowing that, and it's impossible to know.
Yes. Well, I can share my ideas on gold while we're talking on gold, and while we know that a lot of people in the audience are, focused on gold. Even though it may not be the easiest asset to trade, we know that people love them. People like wearing them. People like receiving gold, and especially trading, even if that may not be the easiest one to trade. I'm going to switch to my chart. Is that okay?
Yeah, of course.
All right, perfect. Let's see here. We have on the monthly time frame. I'm going to talk about the CFD. We can look at the futures as well. If people in the audience, there's minor differences, but let's do it on the CFD. So Diana will give you the future chart, and you can get a little exposure of both of them when you compare. Obviously, when you look at the monthly and looking at the candlestick combination, the structures being made, there isn't anything here to tell. There isn't much to talk about other than that the structures to be looking for that daily is way below us. Nothing here actually happening other than pricing being very bullish, right? So but that's not actionable, because where do you enter? How do you define your risk? You gotta have something that puts you in advantage, meaning it has to have some kind of demand zone where it is going to retrace into, so you can get in a optimal entry and profit from it. But that's not possible on the monthly. And let's see on the weekly. The weekly is interesting, because as we zoom in, we will find that previously we only had one bullish structure on the weekly and a bearish one overlapping each other, which is a sign of possible consolidation, range bound movement. But last week, by the end of last week, the close, you can, for those who are, have been watching our stream for some time, will be able to recognize what candles we see here, right? If you would put in the chat, ladies and gentlemen, what kind of candlestick combination is this? Look at it. Take a good look. Like, I'm gonna take away the colors. These two green ones, not the current candle, the open one, but the green ones on this chart. What kind of candlestick combination is this? There isn't a prize for the winner. It's not a competition. But if you can show us, what we're talking about, that would be great. In the meantime, while you guys are typing, and since there's about 30 or maybe 20 to 30 seconds delay in between what I say and when you hear it, a hammer, says Stephen A. I understand that's one, this candle. Anything else? Anyone? This is the hammer, of course, the first candle. What about the combination of them two? Does anyone spot anything? And if you would, tell me what it means. Or maybe I'm asking too much. I'm pushing you guys. You're not in class anymore, you might be thinking. Well, let's see. When we put it back, it doesn't really matter, but let's zoom in and you can see what I mean, right? You have we'll mark the the high of that candle and the high and the low of the previous candle. What can you guys see it? It's an outside bar, meaning this bar took out both sides and closed on outside of the range of the previous bar, meaning buying power, buying pressure coming in. And that is exactly what we read from the market. So previously we were looking at the weekly and saying this is likely to continue to go sideways for some time. However, the appearance of that outside bar tells us on the weekly time frame that the chances that either right away without a retracement, or after price comes back to retest some structure, possibly that same order block that was created by that outside bar, we could, the more probable direction we will be heading is up. Both of them are telling us it's going higher. It doesn't tell us whether that's going to happen with or without a retracement. So we have this is a nice area we could be looking and waiting for price to reach, and that to get in a nice swing trade into higher levels. And if we look at the lower time frames, And I like when this happens, and that's why I'm telling you guys about this. We have, right? We have the weekly telling us that in the coming weeks, meaning, 2, 3, up to 6 candles, meaning weekly candles in the future, it's likely either to continue to go from where we are, or have a retracement and then reverse to go in that direction to the upside. And what do we see here? Right? Let's analyze this little piece here. We can spot that we have a inverse quasi from this area, right? We have from the top, we created a trend, a bearish trend, which is part of a retracement, of course, and it took out that neckline, and it possibly, right, if price is going to go up, right, if we have other indication that price is likely to go up, and we do based on the weekly, then it could use, doesn't have to happen, but it could use this reversal, this inverse quasi, to continue its way up. And the places that I would be looking for are, as we see, it's this one, one order block, or the other one. So there you have it. We have 2 order blocks, and I'm going to indicate this, the weekly, that little weekly order block that I indicated before, which would then be a entry order block for the weekly. That's this part, right? And as you can see, we have overlap of multiple time frames telling us that is a high probable place to get in. So I'm very interested to see if prices has any retraces, and I'll be waiting for it to catch a long from that place. If we go zoom in a little bit longer, a little bit more, do we have a quasi? Let's see if we do. We have 1 order block there and nothing here. So we don't have anything to help us exactly in this area. That's a little bit of a pity. But so we only have the daily. So we'll have to wait for price to actually get there and perhaps share or start giving us the reversal patterns, the price action behavior, that likely there's going to be some kind of a reversal, meaning deceleration, reversal patterns, and then acceleration to the upside. That's what I'm looking for. So there isn't anything yet, I would say, to me, to trade from. I would be waiting for price to reach this area to trade as a swing trade, to reach much higher levels, right? That's the general idea from these levels. And currently we are facing some kind of a headwind in gold, because we can see that bearish structure. It's just 1 order block, but it does tell us a story, right? Even if it's a little story, it still tells us that the sellers are taking control back, and that tells us that perhaps we could expect some kind of bearish momentum coming from that order block, right? That fresh order block that was created yesterday. And if we look for reversal patterns on the H4 to find some kind of entry, there isn't any, right? The neckline is still down here. Let me mark that. This is where the neckline is, so there is no quasi, but we can still look for perhaps, let's say we have 4, 5, 6. I don't think this could be something to look for, right, when price comes back to that order block. But it seems the order flow seems to be clear that the likelihood of that happening is slim, unless we have some kind of headlines, risk on, or risk off, I should say, headlines, which could happen. Remember the escalation scenario we discussed before. So I don't see anything here. And it's not a great place to be looking for a short in there. I would rather wait for price either to hit something above us, a supply zone, or create a new structure, right? New structure meaning a quasi, maybe using not necessarily that area, but something else newly created. So that's on gold. Suna Buzu says, let's buy gold.
I'm long on gold with you, 34.05. I
Nice.
have it split into two two trades. One will be, a shorter term, and then one a little bit longer term. As long as price holds the, just below, the stop is just below the low of the day so far.
Okay.
I really like how price came back up inside that, above that previous day low, and so I'm with you. I don't know how to say your name,
Nice.
Suna Bozu. And Amal said the data is positive for gold, and that can be part of your strategy. For me, it's not. I'm just trading technical action, and if that helps clarify or simplify things, that can help. Gold is, if you're just looking at it from a technical standpoint, it is possible to trade gold pretty well. But like I said, this is definitely a time where gold has been more challenging. But I think it still could be possible to catch a move here or not. That's why we have our stops in place, so that if it's wrong, it doesn't damage you. It's just another trade.
Yes. For those who are looking for a short on gold, I have got a little idea here I would like to trade. I do agree that we are currently, that is between these two yellow horizontal lines, there is a demand zone there, and the likelihood of a pop from this area is quite large, because that's what that's where the impulsive move ignited from. And that tells us that buyers were in the past willing and able to step into the market at that level, and we are currently at that level. So that it's perfectly, I can see how you guys are going long that level. But let's look on just based on the candlesticks, right? So very simple. Looking at the candlesticks, we can see that we had a bearish engulfing from the daily. We go to the 4-hour. We see that there is a fresh order block on the H4, even though this is the area that is better, I would say more efficient in terms of risk if you're coming to the market, if you're not in the market yet. But if you're looking for a short, if you have different reasons to go short and you think you want to favor a short trade, then I would be looking for the current candlestick or current order block, bearish one we are in. And then let's go to the lower time frames to see if there's anything that we can trade from. And I don't see any on the H2, and there isn't either on the. All right, so I don't see anything. We'll have to wait, but this is the area which I would be looking for a short trade. I thought it was something, but apparently there isn't. And on the H2, you can clearly see that from this moment, right, from this instance, not that candle, you can see that the sellers are for the buyers have been actually from this point on, the buyers have there's a change in the order flow, right? By the size of the wicks, you can clearly see that they're defending their turf. Not only that, they had an interaction with a structure below. You can see that clearly how it reacted from that order block right there. And from that moment on, you can see clearly from this candle that we are holding our bullish stand, I would say. So I would wait for that bearishness. Maybe later on today we can check that if that's still, if there is or isn't a opportunity to go short. Awesome. Anything else you would like to share with our viewers, Dr. Cole? Now the news has come out. Do you see, any indication? Is there anything you're watching in the technicals that tells you it's a good place right now to be going long as you're looking for a possible long?
Just in gold, and in the indices, price is still just kind of stuck in that little consolidation range from the last 12, 15 hours or so. So I don't really see anything interesting going on in the NASDAQ or the S&P, but definitely gold has my interest today, which it's been a while since I've said that, because gold really hasn't been particularly interesting to me for a bit, just because it's been so tricky. And this could be just, more of the same. Like we could see just another either sideways consolidation or like this flagging pattern. We'll just have to see. But right now, gold is the only thing that has me interested. But definitely feels like the market is moving pretty slow. There's not a whole lot going on here. It's just kind of slow. And there's another half hour till 36 minutes or so until the New York session opens. So maybe that'll change things, or, maybe that's just the way it's going to be for today. Everybody is maybe concerned about headlines or FOMC tomorrow. But for me, gold is the only option that I see is actionable at the moment.
Nice. And you mentioned your stop is below today's low, right? So you expect that not to be your price not to go much lower than that, or not much lower, not to go even that low before it changes, because we saw the influx on the lower time frames. We had a little break of a trend line. I'm sure you saw that as well in your trade, meaning this. Let me show my my chart so I can show you guys what I mean. This is the demand area we were looking for yesterday to catch a long. It didn't trigger us. And on the H4, there isn't a reason for me to actually, the order block is still valid, but I don't like the fact that we have wicks all the way down. Although with gold, that is something that happens more often than in the other pairs. So we saw the break of that trend line not long ago, and the retest of that neckline. Is that something you used in your analysis?
No, not really. For me, I'm, gold is, you're talking specifically about gold. It's enough for me to see it move below the previous day low and then push higher. So my stop, I don't expect price to do anything. So I try to stay away from thinking about what price is going to do and just look for probabilistic entries. So gold could just as easily move lower as it is to move higher. That to me is just, it's a negative trade then. So it's kind of an expensive trading. But I don't really expect it to do anything. However, I do know that if price wicks below, especially a previous day low, and then pushes higher, it sets up a probabilistic scenario. So I am looking at levels as far as where to take profit and whatnot, but mostly I am paying attention here, specifically on this trade, to the previous day low. So because price took out these two previous day lows and then pushed higher and is currently back above, that just signals to me that there could be an opportunity here. As far as expectation, I have no expectation. Price is going to do whatever it's going to do. Maybe Trump's going to tweet, a tweet. Maybe there's going to be a big headline. We have no idea. I find that it's easier to look for these types of probabilistic entries than it is to try and predict price or to have an expectation. If with expectations, you can get let down a lot. And so for me, it's easier just, enter probabilistically, set a stop. If it hits a stop, then it's a loss. And if it doesn't, then, then I'm in a good trade. And like I said, with gold, because it has a tendency to trend, maybe you can catch a big one. And to me, it's just a matter of time to see what happens.
And we have my follow-up question would be, what levels are you looking for? If we do have a rebound from these levels, what are you looking for next? What would be TP1, TP2 for you on gold?
Trying to think how I want to phrase this. So I know where my stop is. It's below the swing low, and I need to give it a little bit of a cushion. So I don't want to have it right at 39 or 33.90, something like that.
Mm-hmm.
That's not enough of a cushion. So I need a little bit of a cushion for price to wiggle around. And then it is, for a short term for a short-term target, you could do something like 1R or even tighter, and then have a longer-term target as well. So I like where price is. If I can get into a good trade where I can take off, like I said, I have kind of the position that I just entered divided up into two parts. So one I will take profit on quickly, and that will sort of eliminate some of my risk. And then another one that could be longer term. There is a good chance that, price will just mess around for a long time and it might not do what I'm looking for it to do. But if it does do it, this is a really good situation. So I kind of think of it as like I'm positioned well. Doesn't mean that the trade's going to work out, but I'm positioned well. So based on what my stop is, I'd be looking to take about a 1-to-1. And, as far as the longer term one, I think I would definitely be looking for price to move a little bit, especially if I can get the 1-to-1 to kind of eliminate some of my risk. Then I'm even better positioned to hold for a longer term.
Awesome. I like that. We have come to the end of the penultimate hour of our stream today. There is one person, Gitao, asking for GJ. I will do that in a couple of minutes because I think there isn't enough time for you. I was going to ask you, Dr. Cole, to look at GJ, but I think there isn't enough time, right?
Yes, we're out of time today.
Yes.
Time to get ready for the open in 30 minutes. Maybe we'll see a little bit of increase in volume and volatility, or it'll continue to be a sleepy day. Thursday is a holiday, so we're going to have shortened hours, I believe, right? It's not fully closed. It's just shortened hours in the futures market. I'm not sure about for CFDs. And Wednesday is FOMC. So it's a strange week, and this type of thing always makes it, kind of interesting. And so we'll see what happens as the week goes on. But it was great to be here. Thank you, everyone in the chat, for your questions and comments. Good to see you as always, Victor, and I will see you next week. Thanks, Vinicius.
Same here. Dr. Cole, thank you for your time. We really appreciate your insight into the markets, and I'm sure our audience are thrilled with your visit all the time. Thank you. Hope to see you soon.
Take care, everyone. Bye, Marina.
All right, so we have, let's come back to the charts. Marina, how are you doing today? All right, so I'm going to switch to a template of the outlays that makes sense to me, which is this one. All right, let's look at maybe we can go through some pairs. GJ, there was someone asking about GJ. You have a little less than 1 hour, 58 minutes or so, where you can ask us for pair analysis. You can ask us any question about your trading. I'm an open book. You can ask me about anything about trading, either your concept, and we also have a couple of questions from a user. Are you still with us, Tatyam? If you are, then we can go into discussing your questions you asked previously. Let us know in the chat. Then we will have a little discussion about it. We can discuss it again. Angel Rodriguez is going short on pound. We can take a look at GU. To Angel, what are your reasons, and what are the stops, your entry, and your take profit on the idea you have? Let us know in the chat so we can look and maybe visit your what you're trying to catch from the market and see if we're seeing anything in terms of order blocks and quasi, because that is the lens through which I look at the market, right? Order blocks and quasi, and sometimes the lens doesn't allow me to see everything, but a lot of the times I do get great. It's a great method to read the market. GJ, let's do DJ. All right, so we are currently the same as with EU. We are in the higher time frames. We're getting to a monthly structure, a bearish one. It doesn't mean that right away the market is going to change direction. But the more we go into this area, and that's what I'm showing on the chart, the more likely that possibility becomes, right? The more that likely that scenario becomes. But you have to be patient. You have to be, manage your expectation considering the time frame. It's a monthly, so don't expect the reaction to be on just one or two candles. You expect some kind of gotta see more data, more candles to form your idea. Is the market really expecting and reacting on this structure or not? Good to know, Gitao. Good to know. All right, so that's the monthly. The weekly, by the way, that's the same thing with EU as well, right? EU is we can switch quickly to that on the monthly. You can see that I did speak about it or talk about it earlier, that we are interacting. We're above that structure on EU, meaning that's a bullish sign, right? If we're squeezing that structure. But as long as it hasn't been invalidated, you always have to keep it in the back of your mind that we could, in some candles to come on the monthly, we could see some bearishness coming in. And if it does come and you see the bears take over on that time frame, then you can actually take advantage of a trade that could hold for many, many candles. And it's not about the number. I mean, even 2 candles on that time frame will give you enormous good movement. Marina says, not a well, I'm sorry to hear, Marina, but we're here. But we are here to support you and every trader in our community, because trading is not easy. It's not. If anyone tells you it is easy, run. Run the opposite direction, because it's not. Let's be honest, it's not. You can be lucky. You can have lucky patches where you get a lot of results with very little effort. But the reality of trading is that it really takes a lot of effort, a lot of time to get to consistency. I'm not talking about just hitting a lucky winner. I'm talking about really doing this consistently well with the discipline and a good edge in the market. It's something that really takes time. So we're here to support all of you within your process of getting there. And that goes for not only Marina, but all of us, all of everyone in the community, right? That's why we have great communities like the Discord community of the 5ers. We also have the ABL, a free educational platform where you can go and find support. And what I mean by find support is, being part of a community where others will be able to help you in your journey. There might not be, a full-fledged mentor to you, but they can give you a few tips and tactics, or perhaps just the fact that, seeing how they're managing their struggles and their challenges, you can learn from them before you actually make these mistakes or have these struggles. So being part of a community is very, very useful. No problem, Marina. There you have it. We have that's the power of our community. Knowing that you're not alone in this trip, in this journey. There are other traders and great communities like the ones I just mentioned, that we're here to support you, to make sure you don't stray. You keep on the great the fight, so to speak, in your way, pursuing your success. All right, so yes, thank you, Vinicius. Thank you for those words. That's exactly what we mean by community. All right, so we have, coming back to GU, we have that monthly order block that is there. Something to remember, something to take into account. It hasn't given any signals. It's just there to remind us that, it's not going to go up forever, or it might not go up continuously. On the weekly time frame, and we're going to come all the way down to some intraday time frames to help, or not to help, but to assist Angel in his short, or is it a short? Yes, a short on GU, to see what we can be able to decipher from the order blocks and the quantities. So on the weekly time frame, we only have one order block, which is this one, not relevant currently, hasn't been mitigated, and it's still fresh, but it's not anything we can use. Other than that, we can consider, or we can appreciate the fact that we have taken the previous swing high. We had a first reaction. You can see all these wicks, how they wicked and passed once beyond that swing high, but eventually it took a big, very bullish week on GU to close above it. And since then, we have not been, the sellers were unable to push price much lower. Consider this, compare that to EU, where you can see that weekly area has been, there, it's not this this level, which is on GU. It's the significant level is something much more to the left. But even so, you can see that the market had some more difficulty holding that level, and the market structure on EU already is still very bullish. So that makes the one on GU even more bullish. Although you can see that the momentum is decelerating, the speed of the rate of climb is decelerating from the chart, right? You can see on price action that there is a deceleration in here, and we could see GU slowing down in this time frame. Doesn't mean you have to necessarily, go short on the weekly time frame yet, but it does mean we could see some deeper retracement, and maybe even breaking some structures on the lower time frame. All right, so that's the weekly. Nothing else except the fact that it's holding up quite nicely, and we don't have any demand zones nearby other than the one I mentioned. All right, so this order block, there is a inverse quasi going long, but it is based on the weekly we have below us. So it's not relevant. It's not clear. It's not actionable at this moment. So if we zoom closer, zoom in some more, what we see is unlike EU. So there you can have all the nuances, right? On the higher time frame, GU looked more bullish, right? Because it was able to hold that break of that weekly significant level better than EU. But if you consider the order block, the creation of order blocks between EU and GU, you can see that on the same time frame, right? You can see that it is completely different. I'm going to use a different time frame, so we can point out the order blocks. We have 1, 2, 3, and there's actually 4 that was created, and just 2 bearish ones in this part of this period that we're looking for. Not only that, but you can see as well that the swing points are if you consider this is an order block that very, very weak, right away it was taken out. So I wouldn't even consider that a significant swing point in this time frame, right? It was taken out right away, meaning that's how bullish it is. And this is basically the movement of the market, right? And we're currently, going sideways, something like that. Compare that to, let's say, GU, where you can see that the market was before very impulsive, right? But we are currently in a much more less decelerated phase from the market. See what I'm talking about in comparing GU and EU. So that helps me when you're trying to choose which direction we're going, which pair to trade. It's very useful to know which of all of them are reacting on the dollar, but one more than other, right? So it's identifying and knowing which pair to trade and when to trade each one is very useful. But let's continue on the daily time frame. What else does it tell us? So it is less impulsive, right? Less bullish in this period, or this part of the chart. I'm going to take it away. We have Vinicius referring to our workshop of today, later on in about an hour and a half, yours truly will be holding a coffee with traders. We're going to have a interactive session in the Discord community. Whenever you have, if you have a chance, come join us. The way to get in is to get an account if you don't have one already with the 5ers, and in your hub area, right, that dashboard on the lower left corner, you will see an icon for the Discord community. You hop on that server and you will see you will get the schedule and all the good stuffs we have with the workshops on there. And that's what we are. We also give some hub credits as a token of our appreciation for our members who are there. All right, so and if you might ask yourself what a hub credit is, that's a one hub credit is equal to $1, so you can use it on your next purchase on a challenge account, evaluation account with the 5ers, and use it as discount. So it's basically money that you're able to win. All right, let's check on the daily. We have when you consider this and you see that we have the sellers and buyers creating order blocks very close to each other, that tells you that, right, there isn't a lot of directional volatility, right? It's range bound, relatively range bound, even though this is making higher highs, so it is bullishly range bound, right? There is a weak trend, but it's still quite range bound, I would say, right? These highs are not much higher than before. The trend line isn't very steep, even though it is sloping upwards. What else? What you can say about this is that the best thing is to play the range, right? So that would mean that selling the bearish structures and into the bullish ones again. So basically what you want to be doing is taking a short into that second area below us, right? The opposite direction, the opposite structure. And you keep on doing this each time it creates and comes back to the 2-1, like in this case, it came back to it and moved away from it. So how does that help us to formulate our bias and a possible setup? The last, where are we in terms of market structure? We are retesting a fresh order block. Actually, it never left that order block. Look at how all the wicks, all candles had some interaction with that order block, meaning it never left, right? So you couldn't even talk about a first retest, because in order to have a retest, it has to actually move away from it, create space in between, and it hasn't done that yet. So this would be an immediate retest that is still lingering on. That's typically not a great sign, but still, it is a fresh order block, and just by the fact that it is fresh, there is edge in it. There is that possibility where you can trade that retest or that reaction from when price creates these order block and moves away from them after that creation. And that's what we have here. We can say, though, that the fact that we have wicks on the upside that squeeze that order block, if it's not going to be broken this time around, it's not going to hold very long, right? Typically, when you compare order blocks and how price reacts to them, the strongest one, price will barely touch, right? They will have one touch on one candle, maybe an H4, maybe even an H1, and that's it, right? It just touches and flies away. Those are the strongest ones. Then you'll have ones that will pierce the order block a little bit more, but perhaps reach half of it, half of the range of that order block before it actually reverses. But once you see the price coming and not only piercing it completely, but also sticking on the other side, making those wicks, right? Hasn't closed above, so it's still valid, that order block. but you can kind of get the idea that this is not one of the strongest ones, right? This is it's still a valid order block. So if you have alignment, it's still valid to take a short from it or to build a case on it, but it's obviously not going to be as strong as the other ones I described. All right, so we do have here a fresh order block, which is being retested after many candles while in an immediate retest, and it is offering a weak supply basically on price. That's what we can get from it, but it is a daily, and daily, if you're talking about a weak or a very strong structure on the daily, even though obviously you want to, you prefer the stronger ones, but still, if you have a valid daily structure, even though it's weak like this one, you can still use it to your advantage. The fact that it is valid is all that matters. The fact whether it's weak, a bit more stronger, or very strong tells you, how far, if it reverses, how far can you expect price to move from afterwards, right? So meaning if it barely touched it and moved away from it, you can expect price to have a big move afterwards. While if you see that the market has, as it is in this case, has actually squeezed on the top side of it, the extreme of it, even though it still is valid, and comes back into the order block, then your expectations should be that the price probably is not going to go very far, even though it is reacting favorably, but something you need to be a little bit more conservative on your expectation, right? Those are that way you're letting the market, the reaction, the price action, guide you into what is realistic to expect from the market. And you don't have to take my word for it. Actually, that's the best thing. The best thing is to check what I'm saying, go through time, right? Take, I don't know, 100 daily order blocks and score them. Look at the ones that have been barely touched, the ones that have been touched up to half of them, and the ones that have been violated to the extreme as like this one, but haven't been invalidated. And see if you can measure, right, how long the market travels after it moves in the opposite direction, right? Do that on one asset so you can compare these structures, and whether you do it in pips or in multiples of the range of this range, right? So I'm going to indicate this. Either you can measure it, the distance it travels, you can measure it in just in pips, in absolute pips, or you can do it in relative terms, right? Relative to the size of that order block, and just measure that and see what I'm talking about. If you can confirm, and that's the best way to use any information you get online, right? From anyone, no matter who says it. The best way to deal or to make use of or to benefit from it is to test it. If it is true, right? Whoever tells you anything about any concept, any idea, strategy, entry, whatever method or strategy, if it is good, right, you should be able to reproduce in backtesting the edge it has. Maybe not perfectly, but you should be able to measure something, right? So before you spend money buying or either putting money in a private account, personal account, or buying, a valuation account, thinking, okay, I'm gonna use this strategy that I learned from the YouTube from a YouTube mentor, guru, expert. Test it in backtesting, and whatever that person or that strategy tells you that should happen, you should be able to measure that for yourself. That's the best way to take it. So whenever these order blocks and quasi as well, I invite you to test them out, so you can for yourself make sure that you're you know how to use them, and also that they actually have that effect that we or anyone telling you about that concept has. All right, so what we have here is a daily order block that is still valid, a weak one. Remember, I just explained to you how that works. It's a weak one, but it's still valid. So we can go to the H4 and see if we find something that tells us that the market is ready to go one side or the other. In this case, it's the daily. So we're looking to go short, see if that is something we can use. All right, we have two opposing structures, both of them on the daily time frame, and both of them in similar phases. One is both of them are exerting their effect on the market in the immediate retest. What I mean is the sellers, the bearish structure has never left the order block, and it's still at play. But the same is true for the last bullish structure, right? That tells you that there isn't, based on order blocks in any case, there isn't a very clear preference of which way, based on the creation of the order blocks, right? Both of them have equal chances or probability of breaking the other one. Obviously, considering the market structure, you will see this is bullish before it is bearish, or more so than it is bearish. Okay, so but do consider that for the seller. Let's see if we have a quasi. My order blocks are, there is no quasi on the H4. Actually, there is. Let's break this down. Right, so I would still consider this to be the head, the left shoulder, and that the neckline of that H4, because this head, even though it has been squeezed by last week's Thursday price action, and hasn't been invalidated. So that means to me that on the whole complex, this is still valid. And because if I use this as the head, we don't have a quasi all the way, not even here, right? It's going to be this basically, right? So this is the neckline on the H4, right? And it hasn't broken any structure. However, we do have the previous quasi, which is still at play, which is this one being the left shoulder, the head, the left shoulder, and this being a quite large right shoulder, but it's still valid as a right shoulder, since it hasn't taken out that, it hasn't closed and invalidated this this order block. What I mean by is this, right? This being the order block. Let's measure the retracement we had. Retracement, we had two order blocks, and they were still overlapping. Actually, just one big candle. I don't like when that happens. It doesn't allow you to define the your risk very neatly. This is the area that we should be looking for sellers. And in this case, we even had, right? So I would be looking for price to come back to, actually, let's go to another time frame and see if we can find and match a reversal, right, from another time frame. So you have the H4 order block, right? So we want to be shorting from this structure, this H4. But let's see if we can find alignment on the H2 as well. Yes, we can. I can spot in here. So in the right shoulder of this whole H4 quasi, we can actually find a H2 quasi, which this being the left shoulder. I mean the neckline. I'm sorry. That being the head, that being the neckline. That makes this one the left shoulder. There, the head, And anything that happens after the neckline, that means this, and later on, even this is a right shoulder. In this case, because this has been taken out, there is only one right shoulder. Now let's see there, right? So this would be the, right? This obviously already happened. So the entry would have been in this candle after it takes entry, interacts with the H2, I mean, entry order block. From this point on, or from this point on, doesn't matter. After it interacts with that order block, that's when you want to be taking the entry. Let's go to the 1 hour. By the way, on the H4, this is the, let's mark the TP. The TP is this. No, it is, this is the TP on the H4. Okay. All right. So, but you still want to take the trade from the correct area, and that is this this area here, right here. So that is on the H2. Let's see on the H1 where that would be. That has been invalidated. That one is valid as an H1. You see that? But this did not react at the right area. Actually, let's see. No, it did not, right? This that candlestick combination does not trigger me into any trades, because that doesn't tell us that the sellers have taken control. All right, so it is then what we have is the H4 and H2. And that means that I can take this off, or at least make it smaller. And this is the area then. And because we have an H4, let me indicate this for you. Right, so this is the H4 area. That needs to be respected. And then we refine that with H2 from a different quasi, which is this one. And it is the overlap that, so we don't want this part, because that's the overlap. You only want the overlap to be used, right? So when price comes back to that area, this area, there, this area, from the moment it closes down here, you should be waiting for price to come back to get your entry. Obviously, you can enter, with a white stop loss above here, or you could do it like I do, which is enter and then wait for on the low, not enter, wait for a lower time frame reversal and then to enter, right? So you want to be entering in that slither of overlap of order blocks, right? So in this case, that would have been a very nice entry right here. See that? Right there. Obviously, this already happened, and we're trying to help Rodriguez on his current trade. I would see that would be either I catch something in here. I didn't trade this, by the way, just for transparency. Either you catch something in here, right, of reversal on the 5 minute, or when price comes back and reacts like this. Look at that. Look at that reaction. Look at this reaction. I mean, this is very, very obvious. Look at that, those two candlesticks, how price reacts after touching it again. And that reaction, that outside bar, very beautiful, very, very strong. And that tells you that it hit something, right? Even though it had already passed through it, apparently the fact that it was unable to stick to break it and stay above it tells us that there is a Thiago, market so dead. Yes, it is very slow. That's why we're looking working at what we could have traded to indicate. So you can do this in the you can do this in the the next time around when you see this opportunity. We have one question about the how about you're asking, if you're asking about the current situation in the Middle East and what the safety or what implication that might have on our headquarters, I can tell you that all of our everything is in the cloud, right? So we have all the fundamental, the crucial processes can continue to function regardless of what happens on the ground. Okay, let's see. Thank you for your nice words, Manish. Marina and Vinicius having a nice back and forth here. Okay, so as I said, right, that is the overlap of the order block, right? Just by being methodical, using just two concepts without complicating with more complex or more nuanced definitions of order block, which you can if you want to, by really having a very simple method in analyzing, breaking down the market, top-down analysis. I came to this small area which price reacted very, very nicely from it, and you can avoid yourself getting caught in all this all this up and down movement, and just wait for the very, very fast reactions of these areas. And if we go to maybe the 5 minute, we can check if there was a break of structure. In this case, there wasn't on the 5 minute, there wasn't a quasi, or I should say, no, there isn't a quasi. Let's see if I can spot one on the 3 minute. Let's see. There. Yeah, the 3 minute does have a quasi a break of structure. However, there is no entry order block on that. Right, and the 2 minute as well, you can see we have actually all the way here because there's overlap. This is the area. It didn't reach it. So if your trigger was price reaching these order blocks, then you wouldn't have been triggered. But I mean, the method of waiting for price to reach these order blocks is one method, one way of doing it. That's the way I do it, but that's not the only way. Just by using the information I gave you and understanding that the market tried to break this level, right, that area we have below us, understanding that the market tried to break it, but failed at it, that reaction of the break. And when it comes back to retest it and has this reaction again, if you're very aggressive in your entry, I can think of many ways you can enter such a trade. For example, what I would do is one idea that I don't trade this way, but I would definitely want to do that if I weren't trading the way that I already am trading. What I mean is, this is the area you're expecting the reaction from, right? And as long as price didn't break it, it does look like it broke it, but the validity of this area is based on the based on the open, based on the hourlies. Okay, so the fact that a 1 minute on the 1 minute time frame, there are closes above it, does not invalidate the area, right? It's recognizing what area is, what structure is it, and the rules that apply to that structure are based on the pertinent time frame. Meaning, if it's an H2, it can only be invalidated in the H2 time frame. Okay, so recognizing the time frames and the hierarchy of each time frame has on these structures. So when the market rejected it and came back, what I would do is, for example, look for a swing low, right? A significant swing low, and I would enter. One idea would be to enter a stop order below this level, and your stop above this, either the whole area, or if you really want to be very aggressive on your target, put it above these order blocks, or these candles, I should say, and target the whole structure, or a 1 hour or 2 hour order block, which would be that would be this, right? The next structure in the opposite direction. That could be this, for example, as the target, or if you're very conservative, or it could be, the daily order block in the opposite direction. So right there, that level, which would have been hit today. So it would have been needed to be an overnight. Well, actually, it coincides with this order block as well, as you can see. There, see that? That's how you do it. Remember, this is valuable information. To learn this by myself, it took me a long time to find out that these things work this way and not any complicated way. It took me some time. So take benefit, take your advantage of it, and test it out, and let me know what you think. Currently, as I'm looking for price to enter, I'm really looking at all of this. I'm really only interested in trading from this area. And until we get, if I'm already in a trade, until we get to the TP, I would say, the likelihood of price continuing its path towards TP, actually, is that TP? I think it is. No, TP is much lower. That's the H4 TP. I would have my TP there eventually, because that's the top, or in this case, the bottom of the quasi, the bottom of the structure, right? But I will definitely take some TPs or partials from a daily structures we have there, right? Because remember, you in a range, especially this is a slightly bullish range, right? It is slanting towards upwards. You don't want to be targeting something at the other edge of the market, which is of the range, which is this, right? So this is based on the quasi. That's the proper way to place it. That's the completion of the structure, but it doesn't always reach it. Although it does look promising in this case right now. I would say hold it, Rodriguez. Hold it until it clearly breaks this, and if it does, then I'll be more comfortable holding it for the last TP. All right. Nice. Good stuff. Let me know in the chat what you guys want me to discuss, if there's anything in particular. And I would have a, let me see. We have about 20 minutes left in our stream. We can still look at perhaps GJ, since there is one person, Mutasam, asking for GJ breakdown. That's not GJ. There. All right, I'll do it very quickly without explaining too much, so we can do it in perhaps 10 minutes or less. What are the fresh order blocks here? Do we have a quasi or not? We don't have a quasi. Do we have fresh order blocks? We do, but the last one, the one we're trading from, is a bullish one. See that? So based on the monthly, I can be, my first idea is to be bullish, right? But keep in mind that there are bearish structures ahead of us, so doesn't have a clear path towards higher prices. Okay, if we consider the weekly. All right, so what do we see here on the weekly time frame? We do have a quasi here. Is that correct? It is the open 09. The close is yes. Okay, so yes, this is a valid quasi, and if that is the case, then let us see if there is no, there isn't anything. So this quasi is not useful. I'm gonna leave it behind, or leave it alone. We do have a reversal pattern here that hasn't been hasn't been triggered, right? Hasn't been triggered, so it hasn't broken structure. So that tells me that there is still bullishness in this time frame from the whole structure. From this point, basically, it's holding up. And on the daily time frame, which is actually good because it has alignment with my monthly order block, what it's telling me. And the daily here tells us that there is a possibility. Let's see if we can define that correctly. This one is this one, by the way. 98.74.5. There isn't. So there is no entry there. There is one here, though. That one has been invalidated already, so there isn't anything left. Oh, there is one here. Okay, and that's it. We do have some here, but these have been invalidated already. So we only have one order block on the daily time frame to potentially, if we get a signal on the lower time frames, that would be our target. And if we get a sell signal from here, we can actually use this as the target. It does go against the monthly, and on the weekly, we don't have anything. Yeah, we don't have anything on the weekly. Okay, so even though there is that monthly, so that makes this target unlikely to be hit. That is the place, the initial place we can have as an option, right? So that's the TP. Let me mark this with another TP. Okay. All right. So let's look at the 4-hour, for this being the left shoulder, the head. The head and the left shoulder here. Do we have anything else? Let's check. Yes, it does take a long time. I am always trying to do it as quick as possible, but it is it's not easy. All right. Okay. Let's do the H4 entries. So we're looking for, we have 1 here, 2, and 3, and 4. So that means that the quasi, I will not be using it. So there isn't a viable H4 quasi, meaning we only have the daily. So we'll have to work with what the market gives us in terms of the pattern. There's only one structure ahead of us. That's where we want to get short. And until then, we are looking for a long because of this structure, right? Let's see if we had a nice long from this order block. We did have, okay, this was the neckline. There. This is the H4, by the way, so it's not a daily. Okay. And we mark when it broke. Hasn't had a deep enough retracement to take any trades. That's fine. Doesn't always come back, right? So we're currently here. We are only interested if price to go long, if price comes back into this area on that H4 or time frame. We can even prepare for our entries for when that time comes. So we have 1 here, 2, 3, 4. Basically, it's too big. All right, so there's nothing there. I will have to. There is a quasi, but it's not useful. Right? You gotta practice this to be able to assess it right away, to know which quasis to be trading and which one to let go, because they're not gonna give you what you want. On the daily time frame, do we have any fresh order blocks? Ooh, what a beauty! Look at this. Actually, it's a little bit bigger, but I like taking the Look at that. I don't trade GJ, but these are what you wanted to. It already happened, so there isn't anything we can do about it anymore. It is breaking bearish structures and creating bullish ones, so it's clear that it wants to continue. And to me, this is what it wants to reach. That's the intention, or that's the idea behind it. It can do whatever, right? It can go. It cannot reach it. It can go through it, but I'm gonna assume that's the intention of the market, right? That's what it's gravitating towards. This order block has been taken out as well, since the close is above it. So we have the retrace, and it moves out very nicely. This is where you want to be going long, right? So that was on Thursday last week. So currently, is there anything still we can use? Well, there was a fresh order block here, right? When it was reached, it was still fresh. And there is this bearish order block as well, very tied to each other. But is that enough? Let's see. No, it's not enough for me. And then the one, no. So there isn't a reason for me to take a long from here. There is an H1 here, but it's not fresh, and it's not part of a quasi. So I can't take a signal from it. And there isn't a quasi. There is, however, a bearish reversal on the lower time frame. But what time frame can we see this? Only on the 1 hour, which is still useful, but it's not as much as you would think of at others. Let's look at there is a little break of structure. I say little because it's on the H1. That can still mean something. That can still give you signals. But keep in mind, it's just an H1. The daily doesn't seem to be indicating anything else that if reach higher levels. So whatever this H1 is telling us, it's going to be short-lived, right? It means we could break, a structure or two, but you shouldn't be expecting price going much, much lower, because it's just an H1 quasi. H1 quasi is great. If you're scalping, it can be very powerful, enough to scalp all day. But you got to know what you have in terms of value. What can we expect from an H1? Well, if you have H4 containing the area, look at that area, right? You have an H4, they're defining the turf, right? What is the limit of the bears, right? Which is the bullish order block below us. What are the limits of the bulls, right? Which is the bearish structure up on top of it. That's what you have. And since H4 is much more important than H1, even if it's an H1 quasi, you have to listen to that. So you use the H1 quasi within the confinements of the H4, if I explain myself well. All right. So you can still use it, but only use it for this structure, up to that structure, meaning that basically it already made its move, right? So this is the quasi. That is the quasi. That's the left shoulder, the head, breaks the neckline. It comes back for that order block. See that? Comes back for that order block, and then it goes to the relevant or the first trouble area on the opposite direction, which is that H4 order block. So basically, it already happened. To me, I'm not interested anymore in that H1 quasi. So I hope that helps Rodriguez. Was it Rodriguez? No, it was someone else asking for GJ. It was Mutasem, right? If you're still watching, Mutasem, or if you watch this later on, it to me, because that's an H1 quasi and it already reached H4, I would say there is a good chance that the market absorbed that reversal. That reversal did what it was supposed to do, which is reverse from an H4 order block into an H4 bearish into an H4 bullish, and that's it. I wouldn't expect more from the market after this point. So to me, that structure is expired. So the question is, if we have an H4 here, is it fresh? It is fresh, yes, but how do we get in? If we want to go long, because the daily tells us to look for a long, the H4, that's a fresh one, tells us to look for a long, but obviously want to be going long in here. And I couldn't find an entry on the H2 or H1 to refine that H4. And in those cases, I don't do anything. If there's not enough alignment, I'm not going to force a trade. But I would be interested in going long from here, that H4, but it needs to, okay, I see this. And that could be something. It's not a possible entry, but it is a regular order block. We can look back and see, personally, what I want to see is this. This is what I want to see, right? Remember, we want to see that overlap. So I'm going to mark the overlap. This is the overlap, right? So you want to be waiting. I know it makes it very specific, and that's the overlap you want to be waiting for price to come back to. And let's look at the lower time frame to see if it makes sense. Do we have a quasi there? Oh, I like that. Oh, look at this. Oh, nice. Look at this, right? So we have even without going to the left, we have this nice quasi here, right? Actually, that's not even the quasi. Hold on. We can use it from here. That's the quasi, right? So you have the lower low and lower high, breaks the neckline. Now you're waiting for this area to be taken. Okay, all right. So now we have on the 5-minute this as an entry order block on the 5-minute, right? So you have to remember it's a 5-minute, and whether or not you wait for, I would still wait for this to be taken, right? But this is the order block. You could just take the order block as well, but it's much better you keep on waiting for that overlap to be hit, right? Because that's the place that you're using not just one time frame, but multiple time frame telling you to get in. That is a great probability of getting into the trade. If you have multiple reasons, then you can just take the entry order block on that 5-minute. Let's look on the 1-minute to see if we can spot anything else. See how the neckline was broken? All right, so there isn't anything I see here, and it needs to go. So I'm still going to wait for this order block to be touched. The H1 didn't tell us anything. The H2, not H2, but the 1-minute, the 2-minute did tell us something. There is an area here, but in this case, it wouldn't hit the overlap, and I find the overlap to be a good way of filtering the trade. So I want that to it hit that overlap, and this is not a bad entry as well, but that could be, depending on how you trade, what win rate you're comfortable with, you can be less selective and take that one as well. Now, if anyone, this is in any case, that's on the 2-minute and that's on the 5-minute. So you have to know what time frame to look for in order to assess if the buyers have taken control or not. In the meantime, we have reached the end of our stream, guys. Thank you for paying attention, for being here with us with the 5ers, the best prop firm out there. I say this, honestly. It's not a sales pitch. I'm just a trader. But it is, I say what I think is true. So hit the like button if you like our stream. I know when I talk, my sections of these streams, my segments are, you know, a bit more, well, I don't want to say a bit deeper into technicals, but it's very straight to the point. I'm talking about the charts and less about perhaps, you know, I'm not as entertaining perhaps as other hosts, but this is, I think, what can help you become better. You know, focusing on the technicals, on price action, and reading what is actually the market telling me from its reaction to these structures. Right? Don't buy my word for it. Don't take my word for it. You know that what the structures that I mark as being, you know, order blocks, that, you know, as a absolute truth. Go check them out yourself. Go test them. Take 100 order blocks, mark it on one time frame, and score them. Right? How many of them were respected, and those that were not respected, what common denominator is there in the order blocks that wasn't respected? And do the same for the ones that the price did use to reverse, right? That's by asking you these questions, by doing that analysis, gathering your stats. That's not even building your system. That's just concept discovery, right? Concept exploration. What is it? And verification in this case. What am I hearing here from this, you know, Victor? And is it true, right? It's not about what is true to me. It's what is true to you. If it's not true to you, then you shouldn't be using it, right? So get those information, collect those data on whatever I say or whoever says, and make it your own or discard it. It's all good for me. You don't have to trade the way I do. But I tell you, this can be, if you do it right, can be very powerful, and it can actually change your life. I say it from experience. All right, so that's for me, guys. Everyone who wants more interaction with us, with the 5ers, we have today a workshop in about 44 minutes. I'm gonna get some light lunch, and I'm gonna come back with a coffee in my hand to talk to you guys in our workshop. Maybe I can even trade live in front of the in the group, or just analyze. We'll see where the market takes us there. That's it for us today. Hope to see you tomorrow again. And don't forget to subscribe to the channel. You know, show us you appreciate the content. Hit the like button, and see you tomorrow. Bye-bye.